My name is Samuel Oluwatomi Odunlami, and I'm the founder of Trading Academy. I started my Forex trading journey in 2008, and of course, the first time I made profit was in 2015. That was the first time that I could say I withdrew money from trading Forex. So that means I spent about 7 years losing money. So I started trading in 2008, and of course, that's about 18 years now. So from time to time, I hold trainings like this to teach people how to trade Forex. So you may have attended some trainings before where they are asking you to go and bring three people, or bring this amount of money, will give you this percentage and things like that. We don't do all of that. We are fully educational. We teach you how to trade, and then we also mentor you to become a professional Forex trader. Okay, so today's training, I'm going to be going into a lot of details, and you may want to have writing materials to take down as much as you can. I'm going to be sharing my screen as well so that we look at some things together. And of course, I'll be very glad to guide you along this journey of Forex trading. And as we have done with thousands of other people, I believe that you also can make very good money from trading Forex. All right. So I'm going to share my screen, and then we move on from there. So let me share my screen very quickly. And only, okay, so share. Yep. So can everyone see my screen? Can everyone see my screen? I believe everyone can see my screen. Just give a reaction in the chat box if you can see my screen, so that I can just be sure that everybody can see. Okay, good. So uh, let me move this here. Yeah. All right. So let's get started. When we look at Forex, there are a lot of misconceptions about Forex trading. Some people believe that trading Forex is just like having an ATM in your room where anytime you need money, you just go there and make a withdrawal. And, you know, of course, sometimes it may look like that, especially after you've done it for quite a while. Sometimes personally, I want to do some things. I just feel, no, I don't want to take money from my bank account. Let me just go to the market and pick it and all that. Yeah, because that's because I've done it for many years. But as a beginner, you cannot approach Forex like that. Because if you approach Forex like that, then you're going to get your fingers burnt a lot of times. Okay. So, um, the right approach to Forex is to treat it like a business, right? If you are doing a business and you identify something in that business that is maybe taking your profits, for instance, you're selling foodstuff and you have 100 bags of rice in your shop, and then you see a rat in your shop, what do? You block the hole where the rat came in from, you kill the rat, search the whole place and look for every rat that may be hiding there, right? Because you are trying to safeguard your business. So when you're trading Forex, sometimes you may identify some things that, like greed, for instance. Some people are greedy. Some people don't have emotional control. Some people don't have the right skills. And then they approach the Forex market in the wrong way and then they get their fingers burnt, right? So let's try to understand what the Forex market is and then how we can make money from trading Forex. So the first thing we are going to do is, what is Forex? Let's try to understand what Forex is. Forex. What is Forex? This is a combination of two words. FOR, that is foreign, and then this EX is exchange. So when we talk about Forex, we're talking about foreign exchange. So now, what is foreign exchange? And why do we carry out foreign exchange? Foreign exchange is very simple. When you convert one currency to another currency based on an agreed exchange rate, you have traded Forex. So that means if I go to Aboki and I ask Aboki to give me $1, and Aboki says my money is 1,400 naira. If I give Aboki 1,400 naira, Aboki gives me $1. I have traded Forex. Now, another question to ask is what are the reasons? Why do I have to go to Aboki to give him naira for him to give me dollars? There are different reasons. One of the reasons is international trade. For example, in Nigeria, you are an importer and maybe you import cars from Japan. You cannot take Nigerian naira to Japan to pay for the cars. You have to convert Nigerian naira to Japanese yen and use the Japanese yen to pay for the cars you want to buy from Japan. If you want to import something from the UK, for instance, you have to convert Nigerian naira to the British pound and use the British pound to import what you want to import from the UK, right? So every time you see goods and services moving from one country to another country, there has to be an exchange of currency because the person who is buying has to change his currency to the currency of the seller so that he can use that currency to pay for what he wants to buy from that seller, right? So one of the reasons why we trade Forex is international trade. Another reason why we trade Forex is for tourism purposes. If, for example, you travel to the UK on holiday, you cannot take Nigerian naira to the UK and use it to pay for your hotel. You have to convert Nigerian naira to the British pound and use the British pound to pay for your hotel, right? So, no matter how much Ghana must goals of Nigerian naira you have, if you take it to a hotel in the UK, you cannot use it to pay because they don't know the currency you're coming with. So you have to first of all convert your currency to their own currency and then use it to pay for your hotel, right? I remember one of those times when I traveled to Qatar. That was in 2022. I traveled to watch the World Cup. So I remember that day it was Senegal, Netherlands. I was coming out of the stadium and I saw a replica ball, similar to the football that was used in the stadium that day. And I wanted to buy the ball. I wanted to pay with my Visa card and the network was acting up. And the guy was asking me, okay, do you have cash with you? I said, oh, I don't have cash because my Visa card I use for all my transactions. The guy said, do you have US dollar? I said, no, I don't have US dollar. But there's this currency I have. I don't know if you can change it for me. So I brought out 500 naira and gave the guy. The guy just raised it up and said, no, I've never seen this one before. You know, so at that point, no matter how much Nigerian naira I had, the guy will not listen to me because he doesn't know what Nigerian naira is, right? So you have to convert your currency to their own currency before you can do any transactions with them. Another reason why Forex is traded is because central banks want to stabilize exchange rate. Sometimes when the value of a currency is too low, the central bank goes to the market and mops up their currency to create a scarcity of that currency, right? So that their currency can have some value. There was, I think it was the last administration in Nigeria where we're told that they were borrowing about $1.5 billion every month, that they were spending about $1.5 billion every month to stabilize the exchange rate because the naira was so weak. So what the CBN had to do was to go and mop up Nigerian naira from the market in exchange for US dollar so that they can create some scarcity of naira in the market, right? And flood the market with dollars just to stabilize the exchange rate. So banks do that just to stabilize exchange rate. We call it balancing the market. Another reason why Forex is traded is because we want to make a profit. That's the one that concerns us, profit making. We want to go to the market to make profit. If you go to Abuki and you ask Abuki, how much is dollar? Abuki will tell you, dollar is 1,420. But if you bring dollar to Abuki and tell him you want to sell to him, he will tell you 1,380. Why? Because he wants to make that 40 naira difference. Another way you make money from Forex is if um, maybe you get some information, CBI makes a policy, and based on that policy, the exchange rate is going to go from 1,400 to 4,000 naira per dollar. What do you do as a smart guy? You run and go and buy dollar and keep. Then when it gets to 4,000 naira, you convert it back to naira and you have made profit. Right? So every time we go to the market, that is the opportunity we are trying to look for, right? Which currency is strong, which currency is weak. Now, let me give you one uh, very simple picture here. Let me just give you this picture here. Can I delete this? Yes, let me delete this. Okay. Now I said that when the exchange rate was 1,400, Abi, you ran to go and buy dollar because you knew it was going to go up. And the thing went up to 4,000 naira per dollar, right? So you bought it at 1,004 and then you want to sell it at 4,000 naira. Now I'm going to ask you a question, right? This currency we're talking about is US dollar against Nigerian naira, and the exchange rate is 1,400. Now, on the way to 4,000 naira per dollar, which one of them was strong? Was it US dollar or Nigerian naira that was strong on the way from 1,400 to 4,000? If you know the answer, you can unmute yourself and answer. On the way from 1,400 per dollar to 4,000 naira per dollar, which one of them showed strength? Is it US dollar or Nigerian naira that was strong?
US dollar.
Okay, the US dollar shows strength, right? So that means on the way from 1,400 to 4,000 naira, it was the dollar that was stronger than the naira, right? On the way from 1,400 to 4,000. So now what did you do in order to make a profit? You went to buy the strong dollar against the weak naira in order to make a profit, right? So for you to make profit, you had to go and buy the strong dollar against the weak Nigerian naira. So that is what we look out for in the Forex market. Every time we go to the market, what we are looking for is which currency is strong, which currency is weak, so that we can buy the strong currency against the weak currency in order to make a profit. Right? So let's look at a very simple Forex transaction. Please, if you are not muted, kindly mute yourself. If you are not muted, kindly mute yourself. So, let's look at a very simple Forex transaction. Let's say I go to meet Aboki and tell Aboki that I need $100. Aboki tells me, your money is 140,000 naira. Why? Because the exchange rate is 1,400. So I go and meet Aboki and I give Aboki 140,000 naira cash. Aboki gives me $100 cash. What's going on? Uh, please mute yourself. Hope everybody is muted. Okay. All right, so everyone is muted now. Okay. So I give Aboki 140,000 naira cash, and Aboki gives me $100 cash. It's a very simple transaction, but there are some observations that we can make from this transaction. I went to meet Aboki that I wanted to buy dollars, but in the process of buying dollars from Aboki, I sold 140,000 naira to Aboki, right? Aboki also wanted to buy wanted to sell $100 to me, sorry. Aboki wanted to sell $100 to me. But in the process of selling $100 to me, Aboki bought 140,000 naira from me. So it's a buying and selling transaction. I went to meet Aboki. I wanted to buy $100, but in the process of buying $100, I sold 140,000 naira to him. He also wanted to sell $100 to me. But in the process of selling $100 to me, he bought 140,000 naira from me. So we observed that the person who was buying dollar was selling naira. And the person who was selling dollar was buying naira. So there is a law in the forex market that when you are trading two currencies against each other, what you do to one currency, you are doing the opposite to the other one. What you do to one currency, you are doing the opposite to the other one. If you are buying dollar, you're selling naira. If you are selling dollar, you're buying naira. Oh no. All right. If you're buying dollar, you're selling naira. If you're selling dollar, you are buying naira. That's one thing we observe from here. Another thing we also observe from here is that I may meet Aboki today and ask Aboki, how much is dollar? Aboki tells me is 1,400. How much is pound? Aboki tells me is 1,900. I may meet Aboki tomorrow and ask him, how much is dollar now? And Aboki tells me dollar is now 1,450. But how much is pound? Pound is still 1,900. You can have a scenario like this. And that is because when you have naira, you have dollar, you have pound. If something happens and the dollar becomes stronger, it will affect the exchange rate of naira to dollar. But nothing concerns the pound with the exchange rate of naira to dollar. Nothing concerns dollar with exchange rate of naira to pounds. Nothing concerns pound with exchange rate of naira to euro. So they are all independent of each other. So there's a law of independence in the market that every currency pair is independent of each other. Right. So you may go to a pair like euro US dollar now, for example. You look at euro against US dollar, and then you see that the euro is appreciating against the US dollar. You see that euro is appreciating against the dollar. But when you go to maybe euro Japanese yen, for instance, maybe euro Japanese yen, you see that the euro is depreciating against Japanese yen. It's very possible to have a scenario like this. Because when you look at euro against US dollar and you see the euro appreciating against the dollar, it may not even necessarily mean that the euro is strong. It may just mean that the dollar is so weak and the dollar has become very weak that when you look at it against euro, the euro is stronger than it. So you will see the euro appreciating against dollar. It is just because of dollar weakness. And you may look at a pair like euro Japanese yen, and you see the euro depreciating against Japanese yen. It may not necessarily mean that the euro is weak. It may just be that the Japanese yen is so strong, has become so strong. And when you look at two of them, you see that the euro has now become weaker than it because of the strength of the Japanese yen. Right? So when you look at them against each other, they are independent. The movement of euro against the dollar does not affect the movement of euro against Japanese yen. They are two different pairs, right? So having understood this, let's look at what we have in the slides, understanding the Forex market. So let me go to my slides and let's see what we have in the slides, understanding the Forex market. The Forex market is a global market in which traders, investors, institutions, and banks buy, sell, and speculate on currencies from around the world, right? So investors, institutions, the banks, they are all there to buy, sell, and speculate. And you see, this speculative part of it is the reason why we always say that there's nothing 100% guaranteed in Forex. If someone tells you, bring money, I guarantee you that you will make profit, the person is lying to you. Because the truth is that in this market, there are no guarantees. We go to the market to speculate. But the thing is that as professional traders, when we go to the market to speculate, we speculate on the right thing. We speculate on what has happened, not what we think will happen. For instance, if I remember during COVID, when COVID was very hot, I remember there was a case of someone who came online and was saying, the president of US now has COVID, so everybody should go and sell off the dollar. That was during Donald Trump's first tenure. And there was this noise all over social media. Hey, everybody sell the dollar, sell the dollar. And I asked one of them, I said, why are you asking people to sell dollar? Do you really think the dollar is going to be weak? And the guy was like, yeah, the president has COVID, so we have to sell. And I said, well, keep misleading people. And when Donald Trump went into the quarantine center, he spent 10 days there and came out. So what happened to people that went to sell dollar? Now, during COVID, right, the US dollar is a safe haven asset. And during COVID, there was a lot of uncertainty. Stock markets were crashing and everything. And many investors globally were saving their money in US dollars because the US dollar is a safe haven asset. Gold is also a safe haven asset. So whenever there's uncertainty like that, you see investors running to gold, running to US dollar. Now, there was a high demand for US dollar globally. And that meant that the dollar was going to become expensive. So during COVID, dollar was increasing in value. So if you ask people to go and sell dollar during COVID, then you are misleading them. Personally, I made a lot of money during COVID. In fact, I always tell my students that you see that COVID period there, uh, that's one of the highest points in my trading career. That's one of the best periods of my trading career that I've made so much money during a particular period of time. Because I was just buying gold, I was selling GBP USD, Euro USD every day, and I was making a lot of money, right? Gold went up and broke some records. GBP USD dropped and broke some records during COVID, and I was just following, and I made a lot of money during that period, right? Now, I understood that dollar was a safe haven asset. So the moment COVID came, I just sat down. Okay, that means lockdown. Everybody is going to sit at home. That means stock markets are going to crash because many companies are going to be posting net losses, right? Because they are not going to be able to function because there's lockdown. So I said, okay, good. That means stock markets are going to crash. That means investors are going to sell off their stocks and run to gold and run to US dollar. So what did I do? I just started buying gold during COVID. Every day I wake up, I just look whenever there's a slight drop on gold, I hit my buy button. GBP USD, the dollar was very strong. That means the pound was weak against it. Whenever there was any reversal like this in GBP USD, I would just enter sell. So I was just making my money every day like that during COVID. So when everybody came out of COVID and then they were complaining and they were saying, oh, my business is this, and everybody complaining. I couldn't relate because I made a lot of money during COVID, right? So when we are speculating, we speculate on what has happened. The president has not died yet, right? Because they were expecting that since the president has tested positive for COVID, then that means the president was going to die. But the president not die. So what happened to those who went to sell off the dollar? Right. So when we are speculating, we have to make sure that we speculate on what has happened, not what we think will happen. Trading is conducted 24 hours a day, 5 days a week. Going by Nigerian time, the market opens 10 p.m. on Sunday night and closes 10 p.m. on Friday night. The currency market is open 24 hours, Monday to Friday. But Saturday, Sunday, the currency market is not open. It's only the crypto market that is open, right? So going by Nigerian time, the market opens 10 p.m. on Sunday night and closes 10 p.m. Friday night. The market closed 10 p.m. yesterday, and we expect that tomorrow night by 10 p.m. the market is going to open again for the new trading week. The Forex market is the world's largest trading market with a global daily turnover of over $7 trillion. This makes it the largest market in the world. And the bigger the market, the bigger the potential for profit making. So the kind of money you can make in Forex, there's nowhere else you can make that kind of money. There's one of my guys, I follow the guy very well. And he grew an account from $583 to over $10 million within 5 years. I don't know any business you can actually do where you can take 583 and take it to 10 million in 5 years. So, and that is just one of many. There are so many insane figures that even I have experienced, amazing. So when people tell you trade Forex, you can actually make so much money for Forex, they are not lying to you because this is $7 trillion per day market. Every single day, at least $7 trillion moves in the Forex market. And I mean, everybody can just come and play in the market and make some very good money. Okay. So who is a Forex broker? A Forex broker is an intermediary between you and the market, right? Just like when you want to trade stocks, you cannot walk into First Bank head office now and say, hey, give me First Bank shares. No, you have to go to your stockbroker. So you go through your stockbroker to access the stock market. So also with the Forex market, when you want to access the Forex market, you have to go through a Forex broker, right? So what is Forex trading? Forex trading is the act of buying or selling currencies. Once you buy or sell a currency, you have traded Forex. Excuse me. Banks, central banks, corporations, institutional investors, and individual traders will go to the market to exchange foreign currency for a variety of reasons, including balancing the markets, facilitating international trade, tourism, or making a profit. And these are reasons I've explained earlier, the reasons why we trade Forex. Currencies are traded in pairs, and the value of a currency pair is driven by a combination of economic, political, and environmental factors such as wars, natural disasters, and elections. All these things affect the value of a currency. If there is going to be war, like looking at the Middle East now, where US has been bombing Iran, it has affected the price of crude oil. The moment they started bombing, um, I just went to mentorship community, guys, let's start buying oil because oil was going to appreciate. And why will oil appreciate? Because when there's war in the Middle East, it creates uh, tensions within the area, and it affects global crude supply because more than 20% of the world's crude oil comes from the Middle East. So if oil is not able to come out from the Middle East because of war, it's going to affect the global crude oil market because there's going to be a scarcity of crude oil, and then the price of crude oil is going to increase, right? So during wars like that, of course, the price of crude oil goes up, and you know, it has a ripple effect on several other currencies. A currency like Canadian dollar will also gain strength because Canada is a major oil producer, and their currency is going to be strong because they're going to be able to sell oil at a higher price. Even Nigeria too. The war in Iran is supposed to favor Nigeria too. We're supposed to make a lot of money from selling oil at a higher rate. But it's also unfortunate that due to poor leadership, um, Nigerians suffer when the price of crude oil goes up, which should not be, right? So all these things affect the strength or weakness of the currency. So what is a currency pair? All transactions made on the Forex market involve the simultaneous buying and selling of two currencies And these are called currency pairs. So I'm going to give you some examples of currency pairs. Let me go back to my whiteboard. Let me go back to my whiteboard and let's look at currency pairs. Let me delete what I have here. Currency pairs. So we can have something like this. US dollar, Nigerian naira. We can have something like this. US dollar, Nigerian naira. And then we say the price is 1,400. We can have something like this. Euro, US dollar. And then we say the price is, let's say, 1.1420, for instance, right? Now, when you look at these currency pairs like this, you observe that one comes first before the other one. This one that comes first, we call it a base currency. Base currency. This one that comes second here, we call it a quote currency, or we call it a counter currency. So the one that comes first is called a base currency. The one that comes second, we call it a quote currency, or we call it a counter currency. Now, this figure here is the price. And the price is a function, the price is simply the exchange rate between the two currencies. And the exchange rate is a function of the strength of the base currency against the quote currency. So if we look at something like US dollar Nigerian naira now, and we say, oh, US dollar Nigerian naira, the price is 1,400. This 1,400 is just a measure of the strength of US dollar against Nigerian naira. So it's just how strong is the dollar against the naira. All right, sorry, excuse me. How strong is the dollar against the naira? The dollar is 1,400 times stronger than Nigerian naira. How strong is the euro against US dollar? The euro is 1.1420 times stronger than US dollar. So that means when we say the dollar is 1,400 times stronger than naira, that means for you to get $1, you have to bring 1,400 naira. For you to get €1, you have to bring 1.1420 US dollar, right? So the price is just a function of the strength of the base currency against the quote currency. Now, you remember that at the beginning, we said that for you to make profit from Forex trading, you have to make sure that you are buying the strong currency against the weak currency in order to make a profit, right? That means if the base currency starts getting stronger than the quote currency, right? That means this exchange rate will go up. So that means when US dollar begins to get stronger than Nigerian naira, then the exchange rate will now increase to 1,005, 1,007, 2,000, 2,005, right? The exchange rate will be going up because the dollar is stronger than the naira. Now, if the naira begins to get stronger than the dollar, that means the price will begin to drop. So that means when the quote currency begins to get stronger than the base currency, then the price starts going down. So that means naira stronger than dollar, you see the price begin to drop to 1,003, 1,100. It starts dropping to 800, 700, 600, 500. Then you know, hey, Nigerian naira is coming back. Abi? So that means when the base currency is stronger than the quote currency, then the price goes up. So when you see the price going up, you know that it's because the base currency is stronger than the quote currency. Now, when the price is going up, then what should you do in order to make profit? we said you should buy the strong currency against the weak currency in order to make profit. So that means when the price is going up, you simply go and buy US dollar against Nigerian naira in order to make profit. If you look at euro against US dollar, when the price begins to go up, then what do? You simply go and buy euro against US dollar, right? Hope we understand that. Now, when the quote currency is now stronger than the base currency, right? That means the price will start going down. So when you see the price going down, then you know that it's because the quote currency is stronger than the base currency. So what should you do? In the Forex market, you cannot make any decision on the quote currency, but you can make a decision on the base currency, right? Now, it is not possible for you to go to the market and say you want to just buy the quote currency because you cannot make any decision on the quote currency. If you go to the market to either buy or sell, whatever decision you make is on the base currency. So, when the price is going down, you understand that it's because the quote currency is now stronger than the base currency. So, you want to buy the quote currency, but you cannot actually buy the quote currency. So, what do? You simply go and sell the base currency because you understand that what you do to one currency, you are doing the opposite to the other one. So that means you go and sell the base currency in order to buy the quote currency to make profit. So that means we understand that when the price is going up, if we want to make profit, then we should be buying the currency pair. Simply buy the base against the quote. If the price is going down, then the decision to make is sell, because you are going to sell the base currency in order to buy the stronger quote currency. Hope we understand that. So when price is going up, you buy. When price is going down, you sell. Because when you click either buy or sell, it is the base currency that you are buying or selling. Right? Hope we understand that. So let's look at what we have in the slide. Let's go back to our slide. We looked at, well, understanding the Forex pairs now. Base currency is the first currency that appears in the Forex pair, and then the quote currency is the second currency that appears in the Forex pair. It's also referred to as the counter currency, right? Now, let's talk about price. Let's talk about price. Price. Ask price and bid price. When you go to the market, you see this 1.1420, you will not just say 1.1420 just like that. You always see two prices. That means you see something like 1.1420 slash 1.142, let me say 22 as an example. I want to give you an example that has two pips. 1.1420 slash 1.1422. That's how you say the price. There are always two prices involved. Why do we have two prices like this in the market? If you go to a market, a normal market though, like you want to buy something, you go to the market. If you go and meet a woman who is selling tomato, Madam, I want to buy this tomato. How much is your basket of tomato? And she says is 5,000 naira. 5,000 naira. Madam, can I pay 4,500? Now there are two prices involved. The woman wants to sell it 5,000 naira. You want to buy it 4,500 naira, right? Now, if we are to look at a scenario where we have a middleman, let's take, for instance, you want to buy a car, right? Let me just delete what I have here. Let's say you want to buy a car. You see a car, and then, someone posts a car, maybe it's all these car vendors, the middlemen. People post cars on their status, snap cars somewhere and post on status and all of that. Now you see the car, right? And the car is 10 million naira. For example, 10 million naira. The car is 10 million. Now, The middleman will tell you the car is 10 million naira, but you are going to pay me 500K for my own settlement. That's my own commission as being the middleman, right? So that means the person will collect 10.5 million naira from you for the car, right? You will pay 10.5 million naira for the car, but the owner of the car will only get 10 million. You paid 10.5 million naira, but the real owner of the car, the seller, got 10 million. That means the car was sold for 10.5 million naira, right? The car was sold at 10.5 million naira to you. But when you paid the 10.5 million, it's only 10 million that got to the owner of the car, right? Now you see that the person who was selling the car, right? 10 million naira got to him. You paid 10.5 million naira. This is how your broker makes money when you trade Forex. There are two prices in the market, 1.1420, 1.1422. The broker is going to collect 1.1422 from you. But the price that we get to the person who is selling is 1.1420. Why? Because they are going to take the difference, which is this 500K, right? So the middleman took 500K. You paid 10.5 million, right? You paid 10.5 million. The middleman took 500K. And then the person who was selling got 10 million. In the Forex market, when you see prices like this, 1.1420 slash 1.1422, that means the amount you are going to pay is 1.1422. The amount that we get to the person who is selling is 1.1420. The difference between these two prices is what the broker will take. Now, in Forex terms now, this 10.5 million that you paid is called the ask price of the car. The 10 million naira that got to the person who was selling is called the bid price of the car. Then the middleman took this 500K. We call this the spread. That is how your broker makes money when you trade Forex. Ask price is the price you are paying. Bid price is the amount that we get to the seller. And the spread is the amount the middleman will take. So, how do you know how much your broker is going to make? Right? The ask price in this case is 1.1422. The bid price is 1.1420. What is the spread here? 0.0002. That is the spread. Do we understand? So this is ask price. This is bid price. And this is spread. So the spread is what your broker actually makes when you trade Forex. They take the difference between the ask price and the bid price. Okay. Now, when you look at this 0.0002, it looks very tiny, right? It looks like if it's a very small amount. If the brokers are making 0.0002, then how come they have billions of dollars? I'm going to explain something and then we'll come back here. All right. Let's talk about the next thing, which is PEEP. Let's talk about PEEP. PEEP. I hope we're all understanding. Do we have any questions so far?
Yeah,
You have a question?
yeah.
Okay, please ask your question. Oh, we can't hear you. I think you're muted.
Please, I have a question.
Okay, sir.
I don't know if we can organize this training again because my network is so bad. I can't really follow. I just came outside of my room now to see if I can still grab one or two things. I couldn't get it. So I think I'll pray if you can organize class where we can be physically so you can explain for us to me, please. Thank you very much.
Okay, we're actually recording, so probably you can contact me after the train. I'll give you a recording.
Thank you very much, sir.
You're welcome, sir. I'll give you a recording so you can just watch it after. All right. So we understand spread. So let's talk about what's this? Okay. Yeah. I needed to do that quickly. Okay. So where's my pen now? Ha. Now I want to delete though. Um uh where's this thing? Okay, someone raise their hand. Okay, yeah. Please ask a question. You have a question?
Yes, sir. I have a question. Thank you so
Okay, sir.
much.
Yes, sir.
Yeah, my question is, uh, just your explanation as regarding the spread. That is what that's the benefit, or that is what the broker takes. You
Yes.
know, what if the trade eats stop loss?
Okay, if it hits stop loss.
If the trade eats stop loss, will the broker also be part of the loss, or is it only when there is
Okay.
profit? And how is this profit actually made? I don't really get it. I'm trying to get it. For example, I took a trade, and that trade actually eats TP. Is it that when just the way I also get a profit? Is that how the broker also makes profit? Then what about if it eats SL? Then how?
Okay.
How how is it managed? Yes, I think I just need a slight clarification of that. Thank you, sir.
You're welcome, sir. Okay. I'm still getting there where I'm going to show you how profit is made. But talking about whether the broker is going to charge you spread when you hit a sell or TP, the thing is that once you open a trade, the first thing that happens is that the broker charges you spread. Once you click buy, you will see minus something. The broker will first remove the spread even before the trade starts running at all. So whether you make profit or loss is not their business. Their own is that you open the trade, you click buy or you click sell. They have taken their spread. So if you like, make $100,000 is your money. But that spread is the first thing they will take once you click buy or you click sell. Yeah. So I hope that answers your question. So I'm still going to get to showing you how profit is made on trading. All right, so let's go on. Let's talk about PIP. PIP. What is PIP? And then the plural is pips. 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 What is a pip? Now let's look at this. Let's say I have 1.1420. 1.1421. 1.1422. 1.1423. 1.1424. 1.1425. Now, if the price is at 1.1420 and the price now increases to 1.1421, we say it has moved one pip. 1 pip. If the price goes from 1.1421 to 1.1422, it has moved another 1 pip. If it goes from 1.1422 to 1.1423, it has moved another 1 pip. So the pip is just the smallest unit of price change in a currency pair. Once it moves from here to here, it has moved 1 pip. If it goes from here to here, it has moved another 1 pip. So every single movement is 1 pip, right? Now, I'm going to ask a question. If the price moves from 1.1420 to 1.1423, how many pips has it moved?
3 pips.
3 pips. Yeah, it has moved 3 pips. If it moves from 1.1420, let's say it goes from 1.1420 to 1.1440, how many pips has it moved?
20
I
pips.
guess 20 pips.
20
40
pips.
pips.
Yeah,
I
nice.
guess
20 pips.
I'm happy we are getting it. So that is 20 pips. 1.1420 to 1.1440 is 20 pips. All right. The way we calculate the difference in pips, we don't use conventional mathematics. Just whatever is common to two of them, just 1420, 1440. The difference between this and this is 20, right? Not 0.0020. The difference is 20, right? So that's how we calculate our pips, right?
Thank
So
you,
I'm
sir.
happy we are getting it. This is 20 pips. If it goes from, let's say the price goes from 1.1420 to 1.1436, how many pips has it moved?
16 pips.
16 pips.
16 pips, exactly. So that is how we calculate our pips. Nice. Okay, so that is simply what we call pips, right? Just the smallest unit of price change in a currency pair. And this is 4 decimal place. Your pip is always based on 4 decimal places. But when you go to most brokers, you will always see a 5th decimal place. So you see something like 1.14200. What is the meaning of that 5th decimal place? It's very simple, right? When you see 1.14200, 1.14201, 1.14202, up to 1.14209, before you now see 1.14210, right? Now, this 5th decimal place, the movement here, we call it pipette. 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 What is a pipette? Now, let me ask you a question. The difference between 100 naira and 101 naira, what's the difference?
1.
The difference is 1 naira, right? The
It's
difference
just
between 100
just
naira and
1 naira.
101 naira is just 1 naira, right? But do you know that between 100 naira and 101 naira, you have 100 naira 1 kobo, 100 naira 2 kobo, up to 100 naira 99 kobo before you now get to 100 naira 101.00. So
Yeah.
100 naira 1 kobo, 100 naira 2 kobo, up to 100 naira 99 kobo before you now get to 100. Yeah. So now you can say the difference between 100 naira and 101 naira is 1 naira, but it's also 99 kobo, right?
Sure.
If you look at pip, the difference between 1.1420 and 1.1421 is 1 pip. Is 1 pip, but it is also 10 pipettes. It is 10 pipettes. So in between this place and this place is 1 naira, but you have 99 kobo. In between this place and this place, it is 1 pip, but you have 10 pipettes. Right? So a pipette is just 1/10 of a pip. And 10 pipettes make 1 pip. Right? So that's just the difference between pip and pipette. That's the difference between 4 decimal places and 5 decimal places. The 5th decimal place is always the pipette, right? Now, when you trade Forex, you don't make profit in dollars. You make profit in pips. Okay, someone is raising his hand. HT King. Yeah, who is that?
Sir, please, I have a question. You said that they have their prices whenever we are selling, that we will see the ask price and the bid price.
Yes.
So this change now, will the change be on the ask price or on the bid price?
Both of them are moving together.
Okay, they will both be moving like that.
Exactly. Both of them move
Okay,
together.
but the change but the spread between them will be the same.
Yes, the spread is the same. And you see, can you see my finger?
Yes.
Yeah, you see two of them moving like this together,
Okay,
up and down
okay,
together. Yes, that's how they move.
okay. Thank you, sir.
You're welcome, sir. Okay, so when you're trading Forex, you don't make profit in dollars. You make profit in pips. But you are the one who determines the value of a pip. For example, if I buy a currency pair at 1.1420, I bought it at 1.1420. The price now increased to 1.1424. I have made a profit of 4 pips, right? I've made a profit of 4 pips. So these 4 pips can be valued at anything. I can give it any value I like, right? But the fact is, you don't make profit in dollars, you make profit in pips. But it is you who will determine the value of a pip when you're trading. If I go to the market and I trade $1 per pip, $1 per pip, and I make a profit of 10 pips, I've made $10 because it's $1 per pip I traded. I made 10, which is just $10. But if another person decides to go to the market and he trades $20 per pip and he makes 10 pips, he has made $200. We made the same 10 pips, so, but my own is $10, his own is $200. And that person can go to the market and use $50 per pip and make the same 10 pips, and he has made $500. Right? So when you are trading, you make profit in pips. But the question now is, what value did you give your pip? And how do you give value to your pip? The question is, how much currency did you buy at this price before it increased to this price? How much currency did you buy at 1.1420 before it increased to 1.1424? If a bag of cement is 10,000 naira, I buy 1 bag of cement. Cement increased to 15 naira, to 15,000 naira, sorry. If I buy 1 bag of cement at 10,000 naira, I'm a cement merchant, I'm a trader in cement. I bought 1 bag at 10,000 naira. If the price of cement increased to 15,000 naira, I've made a profit of 5,000 naira. Another person buys 1,000 bags of cement at 10,000 naira per bag. That means he bought it 10 million naira. The price of cement increased to 15,000 naira. That means his cement is now worth 15 million naira. How much has he made? 5 million naira.
Yes, sir.
All that cement needed to do was just to increase from 10K to 15K. That is all. The volume of profit you make now depends on how many bags of cement did you buy when it was 10K before the price increased to 15K. So also with currency, the value of these 4 pips is dependent on how much currency did you buy when it was 1.1420 before the price now increased to 1.1424. And I'm going to show you how that works. Okay. So I have one example that I want you to see here. There's an example here. Okay, we've talked about spread, we've talked about pips. All right. So we have an example here. We have euro, US dollar. Which one of them is the base currency?
The euro.
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 Euro is the base currency. What is the US dollar called?
Or counter.
Yeah, the quote currency or the counter
Or
currency.
counter.
Yeah. Now we have two prices here, 1.1717 and 1.1719. Which one of them is the ask price?
1.1717.
Okay. Does anybody have a different answer?
1.1719. No.
1.1719. Okay.
That's
1.1717 and 1.1719. Okay. The ask price is 1.1719 because that is the amount you are paying, the ask price. But what will eventually get to the seller is 1.1717, which is the bid price. Now, what is the spread here? How many pips is the spread here?
2.
2 pips.
It is 2 pips, yeah. So the difference between 1.1717 and 1.1719 is 2 pips. So the spread is 2 pips. So these are the answers here. Base currency is euro, quote currency is US dollar. Ask price is 1.1719. Bid price is 1.1717, and the spread is 0.0002, which is 2 pips. Right. So let's go on. Let's talk about lot. Lot. What is a lot? And this is where I'm going to show you how you value your pips.
Excuse me, sir.
Yes, sir. Okay, I'm listening, sir.
Yeah, before going to the lot size, I want to ask,
Hey,
is
we
the
can
same
hear.
thing
Okay.
applicable to GBP, JPY?
JPY pairs, no. JPY pairs are two decimal places. Sorry, I didn't mention that. Yeah. JPY pairs are two decimal places. When you look at PIP, JPY
Can you
pairs.
hear me now?
Yes, I can hear you. JPY pairs. JPY pairs. Any currency at all, right? Any currency against Japanese yen is two decimal places.
Yeah. Points. Okay.
Yeah. When you're looking at the price, it is always in two decimal places. So you have something like this. Let me erase. Let me erase this. Yeah. So let's say we have something like 201.10, right? That's let's say something like GBP JPY or Euro JPY or something. Let's say it's something 0.10. JPY pairs, anything against Japanese yen is always two decimal places. So that's why we have this like this. So if it increases to 201.11, it's 1 pip.
Okay.
201.12, 201.13, like that, right? Now you also have the pipette here too, which is the third decimal place. So you see 201.100, 0.101, 0.10 up to 0.109 before you get to 110, right?
All
Just the way I
right.
explained with 4 decimal places here. So anything against Japanese yen is 2 decimal places. And then the third decimal place is where you have your pipette.
All
So,
right,
sir,
sir.
why is JPY different from the USD and euros and the rest? Is there any reason for that?
Yeah, the reason is because JPY pairs are very volatile, very, very volatile, right? So they have to make it 2 decimal places because if it's 4 decimal places, I mean, that means for it to go from uh 10 to 11, that would be like
Forever.
it would be like 1,000 pips. It would be like 1,000 pips, yeah. 201.10 to 201.11 will be like 1,000 pips, which is, very wide. And JPY pairs are very volatile. So because of that volatility, they have to make it 2 decimal places so that we won't be having crazy movements in the market. Imagine 201.10 to 201.11, which is 1 pip. But if it's 4 decimal places, it will be 1,000 pips, which will be very, very wide. So because of the volatility, it has to be 2 decimal places.
Okay.
Yes, ma'am.
We'll get to understand better later.
Yeah, okay. So have I answered your question, sir?
Yes, sir. Yes, sir.
Okay. So let's go on.
Thank you.
Yeah, let's talk about lots now. Lots. We want to talk about lots. Lots. What is lots? When I'm talking about lots, I like to use foodstuff to explain lots. I like to use foodstuff to explain lots. Lots. Now, how do you determine the value of your PIP? That's why we're looking at lots. Now, we understand rice, right? Rice. We eat rice every day. And what is the standard unit for measuring rice? I mean, international standard unit for measuring rice. The standard unit for measuring rice is the bag, Abby, bag. So you can say 1 bag of rice. 1 bag of rice is 50 kg of rice. Now, is it everybody that goes to the market that buys 1 bag of rice? No. People go to the market to buy multiples of a bag of rice. People also go to the market to buy fractions of a bag of rice. So you can go to the market and buy 3 bags of rice. If you buy 3 bags of rice, that is 150 kg of rice. If you go to the market to buy 5 bags of rice, that is 250 kg of rice. So you can buy multiples of a bag of rice. You can also go to the market to buy half bag of rice. Half bag of rice is 0.5 bag of rice, and that is 25 kg. You can go to the market and buy 1/4 of a bag of rice, which is 0.25 bag of rice, that is 12.5 kg. You can go to the market to buy 1/10 of a bag of rice, which is 0.1 bag, which is 5 kg bag of rice. So you can actually buy multiples of a bag. You can buy fractions of a bag of rice. So if you go to a market where they measure rice in kg rather than in paint bucket or cup or Congo or what are those things they even use to measure rice again? Oludo, Derica, and all those things. You can walk into that market and say, I need 0.72 bags of rice. They will measure 0.72 times 50 kg. 1 bag of rice is 50 kg. If you want 4 bags of rice, they will just measure 50 kg times 4, 200 kg. They will give you. I want 0.13 bags of rice. They will just calculate 0.13 times 50 kg. They will measure it for you, right? So any quantity of rice you want, they will measure it for you based on the fact that 1 bag of rice is 50 kg of rice. Now, coming to the Forex market, the standard unit for measuring currency is a lot. You remember that the Forex market is a market, is an open market where we trade currency. You go and buy one currency with another currency, right? You use one currency to buy another currency. Now, when you want to order a currency, you order in lots. You buy in quantities called lots. And one lot of currency, one lot is 100,000 units. One lot is 100,000 units. You can go to the market and decide you want to buy 3 lots. If you buy 3 lots, you are buying 300,000 units.
1,000.
If you buy lots, 5 lots, you are buying 500,000 units. You can buy multiples of a lot. You can also decide to buy fractions of a lot. let's say you go and buy half lot. Half lot is 0.5 lot. 0.5 lot. That is 50,000 units. You can go and buy 1/4 of a lot, which is 0.25 lot. That is 25,000 units. You can buy 1/10 of a lot, which is 0.1 lot, 10,000 units. You can buy 0.01 lot, that is 1,000 units. So you can buy fractions of a lot. You can also buy multiples of a lot, depending on how much you can afford. Now, there is a standard in the Forex market, which I want you to pay attention to, that when you buy one lot of currency, when you trade one lot, every pip that you make or lose is valued at $10. $10 per pip. That means if I go to the market and I take a trade and I make a profit of 20 pips, 20 pips. The question now is, okay, what is the value of my 20 pips? How much currency did I trade to make these 20 pips? I traded one lot. So these 20 pips now, every pip is valued at $10. That means I made how much? $200.
dollars.
Do we understand it? So every pip is valued at, Ma, should I come again?
Yes, sir, please.
Okay,
Thank
good.
you, sir.
Yeah. Now I said that when you trade, you don't make profit in dollars. You make profit in pips. But you are the one who determines the value of a pip when you are trading. And the way you can do that is by measuring the amount of currency you are trading, right? If I buy a currency at 1.1420 and it increases to 1.14 1440, I have made a profit of 20 pips. What determines the value of this my 20 pips is how much currency did I buy at this price before it increased to this price. If the quantity of currency I bought is one lot, every pip that I make is valued at $10. And I made 20 pips profit from this trade, right? So if every pip is valued at $10, I made 20 pips. So how much did I make? $10 per pip times the 20 pips I made, which is $200. Times I made $200.
Yes.
Yes. So that is
Okay.
how the volume of currency you trade determines the volume of profit that you make. Now, you also look here, 3 lots. If one lot is giving us $10 per pip, that means if I trade 3 lots, it will be $30 per pip,
Pips.
right? That means if I trade 0.5 lot, which is half lot, if one lot is 10, then 0.5 lot will be 5, Abi? That will be $5 per pip. So here, every pip is valued at $5.
Pips.
If I trade 3 lots and I make 20 pips, 3 lots, and I made a profit of 20 pips, 3 lots is $30 per pip, and I made 20, that's how much? $600. If I trade
Dollars.
0.5 lots, it gives me $5 per pip. If I make $5 per pip and I make 20 pips, how much did I make? $100. Do we understand it? I hope everybody understands. If you don't understand, please let me know so I can come back.
Yeah.
Now,
Yeah,
if
I don't understand. So,
you said what? Okay, you don't understand it.
oh,
Okay. Yeah, what we said is, I gave you an example of cement. I gave you an example of cement, and I said when you buy 1 bag of cement at 10K and cement increases to 15K, because you bought only 1 bag of cement, then you made a profit of 5K. If you buy 1,000 bags of cement at 10K, the value of cement now increases to 15K. You have made a profit of 5 million naira because you spent 10 million naira to buy the cement. Now that is worth 15K, your cement is now worth 15 million. So that means you have made a profit of 5 million, right? So the same applies to currency. When you trade Forex, you are making profits in pips, right? It is the volume of currency you trade that determines the volume of profit that you make, right? And we said when you trade one lot in the Forex market, your profit is calculated at $10 per pip. So every pip that you make is valued at $10 when you trade one lot. So that means if I buy one lot of euro against US dollar, I buy one lot at 1.1420. The price now increased to 1.1440. I have made a profit of 20 pips. Abi, do you understand that one? You understand that one? I've
yes,
made a profit of 20 pips. Now, what is the value of this 20 pips? We said it is determined by the volume of currency that you trade. If the volume of currency I traded is one lot, that means every single pip in these 20 pips is worth $10. The value of every pip is $10. I made a profit of 20 pips. Each one is worth $10. So how much did I make?
$20. No, $200. $200.
$200, yes, because I made 20 and each one is valued at $10, $10, $10 in 20 places. That means I have made 200.
So in that case, your inputs will determine your output. Whatever you
Exactly.
put in will determine what
I
comes
mean,
back
what
to you.
comes out exactly. That's what determines what comes out. So
Exactly.
if I trade one lot, then make 20 pips, I come out with
Okay.
$200. If I trade three lots
Yeah.
is $30 per pip, and I make a profit of 20 pips, I come out with $600. Right? If I trade 0.5 lots, it is $5 per pip. If I make 20 pips, I come out with $100. 0.25 lots is 1/4 of a lot. That is $2.5 per pip. So if I trade $2.5 per pip and I made 20 pips, I come out with $50. If I trade 0.1 lot, it's 1/10. If one lot is giving us $10, that means 0.1 lot will give us $1. Abi, per pip. If I trade $1 per pip and I go and make 20 pips, $1 in 20 places, I will come out with $20.
Sure.
If I trade 0.01 lot, 0.01 lot is 1/10 of one lot. That means it is $0.1 per pip. If I go and make 20 pips, I've only made $2. So the volume of currency you trade is what determines the volume of
It's not,
profits
it's
that
not
you make.
spoiling. I don't know. It's nice now. Where's your friends?
Uh,
No, no, no. I like this black. Then more matured. I have
Sorry. So the volume of currency you trade is what determines the volume of profit that you make. Now, someone may now be thinking, if I catch this market, I will trade $1,000 per pip. So that if I make 10 pips in a day, $1,000 per pip in 10 places, that means I will make $10,000 in one day. That means I've made 14 million naira in one day. If I trade it Monday, Tuesday, Wednesday, Thursday, Friday, that means I will come out with 70 million naira in 1 week. So that means if I trade for 4 weeks, I'll come out with 280 million naira. You know the way the human brain works. You could just they calculate. The truth is that if you go to the market, you trade $1,000 per pip, you make 10 pips. You withdraw your $10,000, easy, no issue, 14 million made. But if the market goes against you, 10 pips, you have lost 14 million naira. So before you go and use $1,000 per pip, you should ask yourself, can you afford to lose that 14 million naira? Right. So I always advise the lower, the better. That's what will keep you long in this market. Right? The lower, the better. So when you trade certain volumes, of course, it determines the volume of profit that you make or the volume of loss that you have on your trade. So when you're looking at profit, also look at loss. Now, there's a mathematical relationship between the number of lot you are trading and the value of every pip that you make. And that relationship is very simple. It's just times 10. Times 10. One lot times 10 gives us $10 per pip. So that means if I trade one lot, if I want to know how much I'm going to make per pip, it's just one lot times 10. So the number of lots you are trading times 10 lets you know the value of every pip that you make or lose on that trade, right? If you trade 3 lots times 10 gives you $30 per pip. If you trade 0.5 lot times 10 gives you $5 per pip. If you trade 0.25 lot times 10 gives you $2.5 per pip. If you trade 0.1 lot times 10 gives you $1 per pip. If you trade 0.01 lot times 10 gives you $0.1 per pip. So whatever number of lots you are trading times 10 is the value of every pip that you will make, as profit or as loss. So that means if I want to make $4 per pip, if I want to make $4 per pip, I have to go and trade 0.4 lot because 0.4 times 10 is what will give me $4 per pip. Do we understand that? The number of lots you are trading times 10 is the value of every pip that you make or lose on any trade. So let me just ask some questions here so that I can be sure that you guys understand this thing very well. If I want to make $24 per pip, I want to make $24 per pip, how many lots will I trade? If I want to make $24 per pip, how many lots will I trade?
2.4 lots.
Exactly 2.4, because 2.4 times 10 is what will give us 24. Yeah, so you trade 2.4 lots. If I want to make $72 per pip, how many lots will I trade?
7.2.
2.2.
7.2 lots, yeah. 7.2 lots is what will give me $72 per pip. And if I trade $72 per pip and I make a profit of 10 pips, how much have I made?
$720.
$720 because I made 10 pips and the value of every pip is $72. That means I've made $720. Nice. I'm happy we are getting it. Does everybody understand this? Any question?
Yeah. But sir, I have a question. This $10 per pip, then
Yeah.
if you increase a lot, it increases also. Is
Yes.
it for every currency? Like is a standard for every currency, any currency you're trading?
Every currency against the US dollar gives you $10 per pip. But when you are
Okay.
having different combinations, then you now say it's approximately $10 because some of them will not give you $10 on the dot. Some will be 10 point something, some will be 9 point something, or 8 point something. You understand? So it depends on the currency pair you are trading, but it's always approximately $10 per pip. But if you are trading anything against the US dollar, it's a straight $10 per pip.
Oh, okay, sir. Thank you, sir.
Yeah.
So sharp.
Any questions? Any questions on it?
Mm.
Any questions? No questions. All right. So we understand this perfectly that the number of lots you are trading is what determines the value of every pip that you make or that you lose. And when you go to the platform to trade, your broker will not ask you how much you want to make per pip. What they will ask you is what volume do you want to trade? And
Hello,
volume
sir.
is calculated in lots, right? Volume is calculated
Can you hear
in
me?
lots. You okay? Yeah. Yeah. You want to ask a question?
Yeah.
Okay. Okay.
Yes,
Yeah.
sir. Can you please relate the lot size to the amount you have in your account?
Okay.
Like the detailed.
I'm getting there. That's the next thing we're going to talk about after this. Yes.
Thank you, sir.
Yeah. Okay. So we have a good understanding of this. So let's talk about next thing now, which is leverage. Leverage. Okay. So we've looked at lots. That's the okay. Leverage. So what is leverage? Leverage is a service your broker gives you that enables you to trade with borrowed capital, right? The broker gives you an option to trade with borrowed capital. We're talking about 1 lot, 10 lots, 20 lots, 50 lots, 100 lots. How many people can actually afford to trade 1 lot? How many people can afford 1 lot? Because 1 lot is $100,000, right? So now the broker now tells you, okay, we know you want to trade 1 lot, but you don't have it. Now bring any amount you have. We'll multiply it for you. We'll give you the remaining as a loan, right? Let me delete what I have on my screen so that I can show you what leverage is all about. Leverage. It enables you to trade with borrowed capital. And they will give you a loan and they leave you alone. You know, someone said, I'm looking for a bank that will give me a loan and leave me alone. The broker will give you a loan and leave you alone.
Is okay.
Right. So let's quickly look at leverage. How does leverage work? All right. Leverage is always quoted in ratios, right? Let's say we have something like 1:500. This simply means that whatever money you put in your account, your broker multiplies it for you times 500. When you create your account, your broker will always ask you whether you want leverage. If you say you want leverage, yeah, they will give you leverage. They will ask you to choose what leverage you want. Maybe some will choose 1:50, 1:500, 1:2000. And in fact, a broker like Exchange has 1:unlimited, right? Some brokers give you 1:unlimited. So if you choose a leverage of 1:500, that means any money you put in your Forex account, your broker multiplies it for you times 500. So let's say you go to your account and you put $200 in your account. Your broker multiplies it for you times 500. That means you have access to $100,000. So that means with your $200 and a leverage of 1:500, you can actually trade one lot. You have access to one lot. If another person says, I don't want 1:500, I want 1:2000.
Yes, sir, I have a question. Is it that one lot is the like basic? You cannot trade below one lot.
No, you can trade
No.
any quantity you like. I'm just using this as an example here. I'm using it as an
Okay,
example.
okay.
Yeah. You can trade fractions of a lot. You can trade 0.01 lot. You can trade, the least you can trade is 0.01 lot. That's the minimum. 0.01 lot on a standard account. But you can trade 0.1, any quantity of lots you want. And on many brokers, the highest you can trade is 200 lots. Yeah. I've had a friend before that traded 500 lots. He opened 200, 3 trades at once, 200 lot, 200 lot, and 100 lot. That's a total of 500 lots. That's $5,000 per pip. He did a screen recording for me and he made over $200,000 on that one trade within a few minutes. So
Yes.
it's very funny, the way people make use of leverage. So 1:2000, and the guy goes to put the same $200 in his account and is multiplied times 2000, sorry, times 2000. If he puts $200 in his account and is multiplied times 2000, this guy can trade $400,000, which is 4 lots. So this is 4 lots. This guy can trade up to 4 lots. This guy can trade a maximum of 1 lot. Both of them have the same $200 in their account, but their leverage is different. They chose different leverages. So when you want to trade and your broker is telling you don't have enough money in your account, go and check the leverage you have. Maybe your leverage is not high enough to accommodate the number of lots you want to trade, right? So that's very important to note as well. Now, your broker says, bring this $200 you have. We'll multiply it for you times 500 so you can afford to trade one lot. You put the 200, you choose a leverage of 1:500, and you have 100,000. You see this 100,000, if another person comes and says, I don't need leverage, I have $100,000 cash, both of you will go to the market and you will make the same profit.
Sure.
And if you take this $100,000 to the market and you make a profit of $3,000 on it, your money will increase from 200 to 3,200, and you can withdraw this money immediately, and within 2 minutes, you will see a lot. It is that simple. I was speaking at a conference one day and I made this statement, and someone said, they'll be waiting for you on your way out. I said, nobody's waiting for you on your way out. It is that easy in the Forex market. You have made the money already. The broker will not say because they gave you a loan, then they will share the profit with you. No. When they give you the loan, that's why I said they give you a loan and leave you alone. They don't share the profit with you. You own all your profit. Right. Now, this is how it works. Because you may be thinking, what if I have a loss? Then what happens to the money the broker gave me? Will they now come to my house and come and arrest me that I lost their money?
Not
Now, this is how it works. When you look
okay.
at your account, you will not see 100,000. What you will see is $200. But the market is seeing somebody that has $100,000. If they come to the market and they say everybody with 100,000 above, move to this side, you will follow them and move. You have $100,000. The money the broker gives you is not virtual money, it is real money. It is real money, not virtual money. So the money is there, right? You have the money. But if out of this $100,000, your own share in that from that money is $200, how much loan did the broker give you? The broker give you a loan of $99,800.
800.
That is the loan that the broker gave you, $99,800. Now you see this 99,800, you see this, the way I'm drawing this circle around it, you see that there's no space there at all. Eh? You see that there's no
Touchable.
space at all. The line is not broken.
Untouchable.
That is how the money is in your account. Nothing can happen to that money. You cannot lose 1 cent from that money.
Either loss or profit.
If you are making a loss, you can only lose your own 200. You cannot lose the broker's money. If you are making profit, everybody
Sir,
is happy. You make
okay,
profit.
sir. Does it mean
Yes, sir.
that there's a limited amount of loss you can make? Like if you make a loss too much and you lose the whole 200, the market go to court or something like that.
Yes, because your own money is
It says
200. The money you put in your account is $200. Once you lose that
Okay,
$200, you have zero in your account. So that
okay,
means you have to go and bring another money to come and trade again, right?
okay,
And if you ask your broker for leverage, they will give you, they won't say because you lost money, then they won't give you leverage again. If you like lose 100 times, they will still give you leverage because you cannot lose their own money. So every time you ask, they will give you, right?
okay. Thank you,
Now,
sir.
you're welcome, sir. So this 99,800, nothing can happen to it. Nothing, no matter how bad the market is, it's only your own money you can lose. You cannot lose the broker's money. But a question now comes to mind. Is it that this money is just there? What's the gain of the broker in all of this? That they're just giving big loans. I mean, we have millions of traders all over the world. They are giving everybody mighty loans. You know, what is their gain in all of this? It's very simple. You know that
spread.
brokers charge you spread. Spread is charged in pips. If you trade $1 per pip, your broker will charge you spread $1 per pip. If they want to charge you spread of 2 pips and you're trading $1 per pip, 2 pips is $2. Once you open your trade, you see -2. Before you even start making profit, you see -2 first. If you are trading $100 per pip, your broker wants to charge you 2 pips, they will charge you $200. So once you click buy, you first see -200 first before you make profit, right? Now, the broker knows that the bigger the leverage they give you, the bigger the volume you
Is
can trade. And when you trade bigger volume, that means
the
the
bigger.
value of every pip is higher. And since they charge you spread in pips, then that means they can charge you bigger money. So they will gladly give you any loan you want, they take. Some brokers have one ratio unlimited. One ratio unlimited. So as long as your money can pay the spread, go ahead and open the trade. Just open it anyhow. As long as your balance can pay the spread, go ahead and open it. But if you lose, you only lose your money. You cannot lose the broker's money. And they will be happy to give it to you because it's a risk-free investment for them. You cannot lose the money, but that money will bring back bigger spread for them. You understand? So it's a win-win situation for everybody. You have an opportunity to make more money. The broker also has an opportunity to make more spread, right? Yeah. So I hope we understand this.
Yeah.
Leverage. Yeah. So leverage is always in ratios, and of course, when you create your account, you can, even if when you open the account, you chose 1:50, you can still go and change it later and say, I think I want more. If you choose 1:2000, and that day you go and say, look, I want 1:unlimited, just go and change the settings on your account. Automatically it will change. 1:unlimited. Go ahead. But trade with caution, because trade like someone that has 200. Don't trade like someone that has 100,000, because
Thank
your
you.
own money out of all that money is only 200. So manage your risk properly, right? So let's get back to the slides. We understand leverage. Yeah. Now, what is swap rate? Swap rate is called premium or cost of carry. It's just a charge for leaving your trade overnight. If you open a trade today, you close it tomorrow, they will charge you what is called a swap rate. It's just a charge for holding your trade overnight, the cost of holding your trade overnight. So that's called swap rate. But most brokers now have swap free accounts. I think the broker that pioneered that was Exness. They remove swap on most pairs. So if you hold a trade for 6 months, some professional traders I've seen, there was one guy I was chatting with online, and I was just showing him one trade setup like that. And, we're just talking about it, and I say, yeah, we were talking in November. It was in November we were talking. And the guy said, yeah, I've been on that trade since February. So he has opened the trade since February. That means that trade was 9 months old. Now imagine that the broker was charging him swap rate every single day. I mean, they will have eaten into his capital already because you're charging you swap every day for 9 months. But a broker like Essence tells you, we have removed swap on most pairs, so you can hold it for 2 years if you like. Nobody will charge you any swap rate for holding it for a long time. And the moment they did that, they were able to attract the guys with the
Customers.
billions. Yeah, they were able to attract the big boys. It's it's a very smart move by Exness, and they're the largest brokers in the world by several miles. So that is swap rate is just the cost of holding your trade overnight. So let's talk about equity. What's equity? Equity is just the value of an investment as at the time you are checking that investment. If, for instance, you go to an investment company and you tell them, look, I want to invest this 1 million naira here. And you go back after 1 week and you ask them, what's the value of my investment now? They tell you it's 1.2 million now. You cannot say you have made 200,000 profit on your 1 million because you have not collected your money. If you leave it for another week and say, okay, let's see if it will double. Then the next week you come back, what's the value now? They say it's 700,000. You cannot say you have lost 300,000 because you've not collected your money. But if you get angry and say, 700,000? So you people have lost 300,000? Okay, give me my money. That is where you have lost 300,000. But if you hold it again, maybe in that 1 week, you come back and check and they say the value is now 1.8 million. You now say, okay, give me my money. That's the point where you can say you have made 800,000 naira profit. So if you have not taken your money out of the market, it is still open to market fluctuations. So whatever you are seeing is your equity. It is not a realized profit yet until you have closed that trade.
Yeah.
So if you go to your Forex account, you put $10,000 in your account and you open a trade on gold and you just see $4,000 profit. Your equity will showing you 14,000 because you put you put $10,000, you are making a profit of 4,000. Your equity will be showing you 14,000. Then you say, wow, $14,000, me, 14K. Then you say, I'm coming. You now go to Hisense office with one hand in your pocket. How many inches is that TV? They say it's 275 inches. Say, how much is it? Says 1.7 million. Say, give me two. Give me two. When you have money, you talk anyhow. By the time you come back home and they're installing the TV and you come back to check your system, you see 0.00. 0.00.
Okay, so I
Man,
want to ask a question. Is it that if you carry your market overnight, if you just wake up and check your trade, you see that like they have removed the swap rate?
yeah. As the trade is running, now this is it. A normal day closes by 12 midnight. Normal
Yes,
day closes 12 midnight. And that same 12 midnight, a new day begins. In the Forex
yes.
market, going by Nigerian time, the market closes 10 p.m. Nigerian time. And that same 10 p.m., a new day begins. So if your trade is open as at 10 p.m. Nigerian time, at exactly 10 p.m., they will charge you swap. But if you close it, if you open a trade maybe during the day and all, then quarter to 10, you close it, they won't charge you swap. But if you open the trade quarter to 10, You now close the trade 10:15. The fact that it was open as at 10 o'clock, they will charge you swap. It's just a charge for leaving your trade overnight.
Okay.
You understand
Okay.
it?
Now,
So yeah.
does that swap rate, does it depend on anything, or is it a constant amount? Does it depend on like how your trade is going, or
No, it depends on the lot size you are using.
okay, on the lot
It
size
depends
you've
on
got?
the lot size you use. Yes, that's when they charge you based on the lot size. But like I said, on exchange they don't charge you swap on most pairs. I love gold a lot. I trade gold, you know, and but they don't charge me swap on USD pairs. They don't charge me swap.
Okay, sir.
Yeah. So equity, when you're looking at equity, there's a difference between equity and balance. When you see equity, don't be emotional and think that you have made profit. As long as you have not closed that trade, that money can still be lost. And it can also still double, you know. So, but what I always advise my students is when you see reasonable profit, close your trade. Once you see reasonable profit, close your trade. If you go into a trade and you're expecting to make a profit of like 200 pips and you can see a profit of 160, you don't sit down and say it remains 40. No, you have seen 160 already. You are not the one that will push it the remaining 40. Okay, close that thing. You understand? So for me, I always we call it a bird in hand, In mentorship, we call it bird in hand. So once you have a bird in hand, just leave. It's what I do with my students a lot. When we are trading like that, I'll tell them where I'm entering, where I'm exiting. And the point where I take my bird in hand, I'll come to the group and say, guys, I've exited. And because I feel I've made it. Yesterday, it even happened yesterday. There was a trade I called on the group. It was supposed to go 100 people. We were going to make 100 pips on it. And then I was following, it got to 70. Then when it got to 90, it slowed down. So I just closed it. And then I went to the group. I said, guys, I've exited finally. Everybody closed. You won't believe it didn't get to 100. It started going back. So you should always know when it's time to take whatever profit you have seen and leave. Right. So that is the difference between equity and balance. Now, we said that for you to make profit in trading, you have to make sure that you are buying the strong currency against the weak currency, right? How do we know when a currency is going to be strong or when a currency is going to be weak? And that brings us to analysis. There are two ways we analyze the markets: fundamental analysis and technical analysis. When we talk about fundamental analysis, it means trading using the economic condition of a country to determine how you want to approach their currency, right? And this can be gotten from news and events. A lot of time you see news coming from different countries, different economic indicators. Like, for instance, a report like unemployment rate, for instance. If they release a report of the unemployment rate in a country, and you see that the unemployment rate in that country has dropped, what does that tell you? That means the number of jobless people has dropped, right? That means the economy is doing well because it's able to create jobs for people. So once you see that kind of report released for a country, then you know that economy is doing well. And what do? Immediately it comes, you buy their currency because you know it's going to be strong. Buy their currency, look for another weak one to buy it against. So if, for instance, maybe US dollar, Swiss franc, for instance, a report comes and shows that US dollar unemployment rate has dropped. That means the US economy is doing well. And maybe at that time, the Swiss franc is weak. Once the report comes out, you already know that dollar is strong. Just look for the weak, or Swiss franc is weak. Buy US dollar against Swiss franc and you make your
Yes, I have a
profit.
question. So please, like, so since you have been like, I know you have been like trading for years now. So like, is there any app you have for to be getting all this news and information that I can use and be analyzing the trade?
Yeah, I'll give you some websites. I'll give you some
Okay.
websites where you can get it. Yeah. So you see different news and events that come every day, And then you make a decision based on these news and events that affect the market on a daily basis, right? Now, I'm going to give you some websites where you can get all this information. Let me just write it for you here. Let me just write it for you here. Let me delete what's here. Okay. One of them is forexfactory.com. That's the most popular one. forexfactory.com. And that one is investing.com. Investing.com. And that one is my fxbook.com. These are websites. These are three of the most popular ones, but there are several others. But these are the three that I use personally, to do my fundamental analysis. So there are news and events that affect the market on a daily basis, and you can make your trading decisions based on the information you see on those websites. Forexfactory.com, investing.com, myfxbook.com, those are websites where you can get those information. Then technical analysis. Technical analysis is a way of trading whereby you are not using news to make your decisions. You are using the price movement to make your decisions. So if, for instance, you look at the chart of euro against US dollar, you see that the price is going up. That tells you that euro is stronger than dollar. So you simply buy euro against dollar to make profit. Or euro US dollar has risen to a level where you expect that the price is now too high, and then you expect that it's going to drop. Then you know that, okay, that means the euro is now going to be weaker than the dollar. So what do? In order to buy the strong dollar, you sell euro. So you just sell euro USD from that level. That's technical analysis. Basing your decisions on what you see on the chart, the kind of movement you see from the price, right? So that's the difference between the two of them, fundamental analysis and technical analysis. And, these are things that we do every day, a lot of technicals, a lot of fundamentals, There are news that come every week. There are some news that come once a month. There are some news that come, 8 times a year. There are some news that come every week. It depends. And depending on how you trade, you can decide to follow some of these news. All right. So let's talk about stop loss and take profit. What is stop loss? Stop loss is a limit you set on your trade. You cannot afford to lose beyond that limit. For instance, if you go into a trade and you feel that you can't afford to lose more than 30 pips, then you set a stop loss of 30 pips so that in case you are losing, once your loss gets to 30 pips, your broker will simply close the trade for you and bank the loss. Minus 30 pips is better than minus 200. So the stop loss helps you to control your loss. It helps you to prevent huge losses on your account, right? So
So
at
you
every
said
point,
you said bank your loss. Does it mean that once the trading end, the amount in your trading will be withdrawn into your account,
no, okay. For instance, maybe you have,
or will it remain as an equity there?
okay, let me just give you this instance. For instance, maybe you have $100 in your account, right? And maybe you are using, okay, let me use this example. You have $1,000 in your account and you're trading 0.1, which is $1 per pip. And then you go into a trade and you say, I can't afford to lose more than 3% of this account. 3% is $30. Trading $1 per pip, if you lose 30 pips, you lose $30. So you say, okay, I'm going to set a stop loss of 30 pips on this trade. So when you go into the trade, in case you are losing and the loss gets to minus 30, your broker will automatically close it for you and you just come back and see minus 30. you have 970 left.
Okay.
You understand? That way, you're able to control your losses rather than you not putting a stop loss. Then the market now goes against you minus 400. You just come back and, hey, minus 400. You have only 600 left. That would be,
Okay.
yeah. But the way the
Okay.
stop loss helps you is that if you put maybe minus 30, once it gets to 30, the broker will close it for you. You have 970 left. So that's
Okay.
stop loss, yes. Then take profit is the other way. If you want to make, let's say you want to make a profit of, let's say, for instance, 70 pips on a trade. You set a take profit there, 70 pips. So whether you are online or not, if you like, whether your phone doesn't have network, your phone battery died, whatever. Once you set it there, whether you're online or not, your broker will honor it. So if you want to make 70 pips, you set your take profit to 70 pips. Once you are in profit and the thing gets to 70, the broker will automatically close it for you. You will just come back and see you're having $1,070, right? So the stop loss helps you to control your loss, and the take profit helps you to lock in your profit when you hit your profit target, right? So these are very, very important for you for risk management when you're trading. For those of you that will trade with us, man, all these things we do it practically every day. Every day. Very, very interesting. So let's get to risk management. Risk management, you can decide to trade conservatively or aggressively.
Can we call
Okay. You have a question?
Wait,
I'm
sir,
listening,
please, you
sir.
say stop loss. Wait, sir, you say stop loss and which other one again? I
Okay,
was
take
writing it, please, I did
profit.
not get that.
Okay,
Okay, take
stop
profit. Thank
loss
you, sir.
and take profit. Yes. Stop loss and take profit.
Okay.
can we
Yeah.
equally include the break even, sir?
Can you include what?
Break even.
Hello, sir.
Break even. Oh, that's a
Hello, sir.
different. Okay. Yes, sir.
Hello.
Yes,
Your
sir.
network.
Yes, I can
Yeah,
hear
I
you.
said I think it's better. I think it's better one take set his stop loss and take profit all together at a time, so that
Yes.
if it goes either way, one is at one the risk is at minimum.
Exactly.
Thank you.
Exactly. Yes, that's very good practice when you're trading. Use the two. Stop loss and take profit. Yeah. Then you asked a question about break even. Break even is very
Yeah.
simple. If you are in profit and you want to secure your profit, there's what we call break even, whereby you move your stop loss to the price where you entered the market, right? If, personally, I'm not a fan of break even because
Wow.
if, for instance, I'm expecting to make 200 pips on the trade, the price has moved 100 pips, and I go and set break even on 0. The thing now comes back and hit break even. It will pay me, right? Because I've seen 100 already. Why will I now allow it to come back to 0? Because I'm expecting 200. So for me, I would rather close it on that 100 that I've seen rather than setting break even, right? Break even, yeah, people like to use it because it secures it while the trade runs. But if at all you are going to use break even, I will advise you to take partials. You know what it means to take partials?
Yes, sir.
I will advise you to take partials before setting break even so that at least
Yes,
that
sir,
way,
please,
even
I
if it
did
goes back
not,
to 0, you have made some good money already.
sir, please, I did not get this break even you talked about now.
Break even. Okay. We said stop loss and take profit, right? Let's say you open a trade. Your stop loss is 30 pips. Your take profit
Mm-hmm.
is 100 pips. So that means in case it goes against you 30 pips, the trade will close. And if it goes in your favor, 100 pips, the trade will close. Now,
Yes.
let's say when you open the trade has now moved 60 pips or 65 pips. You don't want to close it. And at the same time, you want it to continue running, right? Because you believe that it's going to go 100 pips. Now, you now do something and say, okay, you will take your stop loss away from minus 30 and put it on the price where you entered so that in case the price comes back, it will just come back and hit the stop loss at the price where you enter. So no profit, no loss.
Okay.
Exactly. That's what we
Okay, you
call
can
break.
change your stop loss as the market is going.
Oh, yes. As the trade is running, you can edit your stop loss and you take profit. Yes, you can.
Okay.
So that
But sir,
one just helps you to secure it. But I'm not a fan of it because I don't already see 70 pips. I will can't leave and make it go back zero.
but sir, can you
Understand?
hear me, sir?
Yes, I can hear you, sir.
In most cases, we don't put it in the place where we enter the market. We can either shift it upward a little.
Oh, so that
Like
means yes. Okay. You're not talking about trailing stop now, whereby as
yeah,
the thing is moving, you are also moving your stop loss. When
yeah.
it moves
So,
to 110 pips, you move it to
Exactly,
40.
sir.
It moves.
Exactly.
So that means, okay, if I'm expecting maybe 200 pips now, and I keep following it. When it gets to 100, I move it to 40. It gets to 140, I move it to 80, like that. After I've seen 140, I'll now like to come back to 80. It depends on you anyway. It
That's
depends
a
on
poor
you.
management.
It depends on
Hello,
you.
sir.
For me, as I did see the 140, if I look at it and I feel that this thing has slowed down, I will close it. Imagine, okay, see the example I gave you now, what happened yesterday. I called a trade, 100 pips. It was going to go 100 pips. But when it didn't go to 90, it slowed down. Imagine I now set a trailing stop to maybe 40 pips. The thing will now come back and hit 40. When I've seen 90 already, man, I'd rather close it in the 90. You know.
Hello?
So yes, okay. I'm listening, sir.
Okay, sir. What I'm asking, and okay, like some of us that don't have a group that gets signal one. So okay, now let me say example. Now we'll just a bit study a chart, then want to move. What's
Yeah.
the right ratio that we can put our stop loss? We might just decide to check the chart. Okay, then okay, I think I can sell from here. I think I can buy from here, but we don't really know the calculated ratio. For example, I know that you might say, okay, it's good to put what you know you can lose. But I know
Yeah.
there's still a fixed ratio that one can calculate as okay, this ratio this is supposed to be my entry and this is supposed to be my stop loss. How can we
Okay.
calculate that, please?
Yeah. There are some people who tell you 1:3. They'll tell you if your stop loss is 30 pips, then your take profit must be 90 pips. Some will tell you if your stop loss is 20 pips, then your take profit must be 60 pips, 1:3, all those things. People do it, yes. But for me, I've traded Forex for 18 years now, and I've seen it all in this market. And I can tell you that if your stop loss is 30 pips, it is not a guarantee that the take profit will be 90 pips. For me, I would say set it according to the structure you see. Set it according to the structure you see, right? For me,
Okay. Okay.
yeah, set it according to the structure you see. So if you look at the opportunity and then you see that, okay, this stop loss is too much for me, I can't afford this stop loss, then don't take the trade. Take only a trade that you know you can afford the stop loss. And when I say you can afford the stop loss, I mean if you have $1,000 account, how much can you risk from the $1,000 account? If you can comfortably risk 5% of it, right? Then of course, if you see an opportunity with stop loss of $50, why not? Go ahead and do it. But if the stop loss is maybe like 100, you cannot tell yourself, no, I can't afford to lose 100. So let me not take it. So for me, I would say trade it according to the structure you see, rather than using
Okay, sir.
the
Thanks, sir.
ratios. Yeah. So risk management. You can either trade conservatively or aggressively, depending on your risk appetite and your trading goals. When you come to the market, you have to determine whether you are a conservative person or an aggressive person. Conservative trading is slow and steady, but aggressive trading has a higher reward, but it can weigh in on your emotions. So you have to know yourself and know your risk appetite before you know how you want to determine, before you determine how you want to approach the market. Now, you don't use Forex to determine whether you are conservative or aggressive. Look at your life outside Forex. In normal day-to-day life. If you are a conservative person, when you come to the Forex market, stay conservative. Don't try aggression. And if you are an aggressive person, a risk taker in real life, when you come to the Forex market, you should maintain the aggression. Because if you don't maintain the aggression, you may be frustrated. A conservative trader will tell you, okay, I have $1,000 in my account. I'll use 0.1, which is $1 per pip. And if I make 70 pips in a day, which is 7% of my account, I'm happy. But an aggressive trader will tell you, if I have $1,000 in my account, let's use 3 lots. Let's trade 3 lots. If I make 40 pips with 3 lots, that is $1,200. I've doubled this account today. The thinking is different, right? So you want to know yourself, know your risk appetite before you determine how you want to approach the market, right? For me, I'm a conservative person in real life. I'm very conservative. I'm this careful person, right? But over time, I've been able to develop an aggressive side whereby I can be conservative in trading. I can also be aggressive in trading. But when I'm taking my aggression, I make sure that whatever is in the account is an amount I can afford to risk. Sometimes I have one spare $5,000 somewhere. I'll put it, take a risk, I'll make 20K, and that is it. There's even one I did. I'll show you guys. I did a screen recording when I took that trade. I had $12,000 in the account. I took 10 lots. Yeah, I took 10 lots on it. I did 8K on it, and that was it. You understand? I can be aggressive sometimes. And if I had lost that 12K, I would have been happy with it because at every point in time when I'm taking a risk, I always ask myself, okay, this aggression where I want to do so, can I afford it? If I can afford it, fine, I take it. You know. Okay, well, I'll show you guys as we go on anyway. So know yourself, know your risk appetite before you determine how you want to approach the market. And over time, you can develop both sides, when you get more professional. So how do you make money from the Forex market? Personal trading. Personal trading. That's where you are responsible for all the parameters of your trade. It's you that will decide the pair you want to trade. You will determine your lot size. You determine where you are putting your stop loss and your take profit. You determine everything about that trade, right? So that is personal trading. And that's why we are here to teach you how to trade personally, right? And when we teach you how to trade, we also mentor you as well. We trade with you every day. So you are making money as you're learning. You are learning from our own experience in trading, right? We have a mentorship community. Some people call me sometimes, do you have a signal group? It's not a signal group. It's a mentorship community. And that mentorship community is free for life. I don't charge for all these, you pay monthly signals, and we don't do all of that. It is meant once you go through the academy, you have a free lifetime mentorship, right? Now, on the mentorship community, we trade together every day. We trade together. You can ask when you see a setup on the group, you ask questions. This setup, how did you come about this? We tell you, okay, this thing, there's a head and shoulders pattern here, or we're looking at this rising wedge, or we're looking at this other block, or we say liquidity has been taken out here, or things like that. And then you're able to understand the reason why we say sell. In a conventional signal group, you see someone that will just come there, sell gold, stop loss here, take profit here. The guy may not even analyze anything, but he's collecting money from you people. So he would just, I had one friend like that one time that was like that. He was just driving one day and said, I never give these people signal. Oh. He just went to the group. Which price Euro USD like this? No analysis. Just say sell Euro USD. Put stop loss here, put take profit here. That's it. It's that he hits your stop loss or he hits your take profit. If he hits your stop loss, you say we go again later. If he hits your take profit, good. If the guy does 30 pips, 30 pips, he will tell you we have made massive profit. 30 pips. In our group, we do 700 pips and it's normal to us. we do 800 pips, it's normal to us. We don't celebrate it like we did 700 pips because it's normal. I've had students since 2018 that have been with me in the community. Some of them, you see the cars, they bought cars, some of them have built houses and all. We're trading together every day. I always say if I teach you how to trade Forex, then I now ask you to come and be paying me every month to give you signal. Then that means I failed as a teacher because what did I teach you? Right? So personal trading will teach you how to trade personally. You don't depend on signal provider. You'll be able to generate your own trading setups to trade, right? Because you have a mentorship committee. We have analysts that are on our payroll. We pay them to generate setups for you. So they are on the mentorship community. They generate setups every day. We look at it together. We trade it together, and everybody makes money together. All the trades I take, I also put them on the group and everybody makes together. We even have live trading sessions too, where we invite people to come over to the office and come and trade with us. Sometimes I call everybody on live meeting like this. Let's take a trade. Maybe we're expecting a news coming or something. We take the trade together. Everybody makes money. Everybody is happy. I'll show you some of the videos of our live trading sessions, as we go on. So it's what we do from time to time. We teach you how to trade personally. That's personal trading. Copy trading is a way of trading whereby you link your account with another person's account, such that whatever happens to the person's account will happen to your own account too. So if the person trades and makes 10%, you also make 10%. If he doubles his account, you also double your account. And if he loses all his money, you also lose all your money. So whatever happens to his account will happen to your own account as well. That is copy trading. Then algo trading is where you link a software to your account that does the trading for you. A lot of people talk about AI trading and all of that. That's algo trading, where you're using a software to automate your trades. So that's how you make money from the Forex market. Now, how do we help you to make money from the Forex market? We give you daily trading signals and
Hello, sir.
setups. Yes, sir.
Regarding the copy trading you just mentioned,
Yes, sir.
now take for example, you have like $200 in your account, and I want to copy your own trade, and I have $50. Does it work like that?
Yeah, it prorates it. It prorates the lot size. Yeah. So if for instance the master trader is using one lot on $1,000, you follow him with $100. Since he's using one lot, the system will use 0.1 on your own account. System will use 0.1 on your own account because it just prorates the lot size you're using. Right. So
Okay.
yeah. So daily trading signals, you get it every day on the mentorship community. I mean, signals, setups, you're never short of setups. Even on weekends, we see trade Bitcoin, we trade Ethereum, and all of that. We give you continuous training and mentorship. After training, we won't say that's the end. We still do market reviews. Today is Saturday, tomorrow is Sunday. Tomorrow
Hello,
evening,
sir.
yes, sir.
Hello, sir.
Yes, sir.
The AI trading, is it better? Is it off? Hello, can you hear me, sir?
Yeah, yes, you're talking about AI trading. Uh-oh, your network is breaking. Uh-oh. Okay.
Yeah. Hello.
Okay. Yes, sir.
Yeah. The AI trading, is it recommended? Do you advise brokers to use AI trading?
Well, the thing
So,
is, personally, is not my thing because I've tried different AIs, and what I can deduce from AI trading is that it will work for a while, but there's always a one day when when the software will malfunction. And when it malfunctions, it will clear your account to 0.00 before it will calm down. Like it will finish everything in that account. I've tried many of them, and the way AI works is it's designed to work in certain market conditions. And once the market conditions change, the software is not able to change and adapt to the new market conditions. Right. So, I mean, there was a time that gold was not doing, gold was not doing more than 200 pips a day, 300 pips a day. You know, I could count how many times gold has done 1,000 pips in a day. But ever since Trump, Donald Trump started fighting Iran, ever since that time, you can see gold moving 2,000 pips. There was a day that gold moved 6,000 pips in one day. If you have AI that is trading, how will the AI adapt to such market conditions? It will clear your money. Some of them is just one news that will come and shake the market, and the AI will be confused. It can't adapt to the new conditions, and then it just malfunctions. So personally, it's not my thing, but people do it. But it's not my own. It's not my thing personally. So we give you daily trading signals and setups. We give you continuous training and mentorship. Tomorrow, Sunday, we have a pre-market session where we are going to look at the pairs we are going to be trading next week. We'll review this week. We'll also look at what we're expecting next week. If there's a new strategy, we bring it to the group. We teach you guys free of charge. We don't charge you for all of that. Copy trading advisory also, we advise you. You want to do copy trading, you can follow this one. Please don't follow this one. This one is high risk and all of that. We'll advise you on all those things. So these are ways that we help you to make money from the Forex market even after the training, right? In addition to what we give you, you also get this from the broker as well. Daily trading signals. Here, they've shown you the reason why they expect this to drop. You see the arrow pointing downwards. That means they expect you to sell. And they give you the reason why they're asking you to sell. So this one is pointing upwards. It's a buy. They've told you the reason why they expect it to go up. Daily trading signals. So this is how you get from the brokers as well, in addition to the one we give to you, right? So let's talk about the rewards now. The rewards. We always have, please, can you spare me a minute? I just need to adjust something here, please. Just 1 minute and I'll be back, please. Please, just 1 minute and I'll be
No
back.
problem, sir. No problem, sir.
Okay, hello. Yeah, sorry about that. I just let quickly attend to someone. So, all right. So these are rewards. From time to time, we have some of our students, they will come to the group and tell us, look at the profit I made today and all of that. So I just put some of the screenshots here. Some of them are old, some are recent. Um, Of course, the community has been running since 2018. So that's like 8 years now. Wow. So I've done mentorship for 8 years. Interesting. So this is $205. This guy made $205 in one day. This guy did $333 in one day. This guy did $155 in one day. This guy did $122 in one day. This guy, his balance was 625. He had this trade running and he was making 83.75. Now you see the equity. Equity is 709. So you see balance 625. Equity 709 because of this profit running. So if he had not closed this trade, I mean, all this is just equity. So then this guy made $2,383 in one day. This guy, I remember this was his first day trading with us. Oh, this is even a 2021 screenshot. Wow, it has been here since. This guy funded $1,000, made $95. I remember that was his first day trading with us. This was a lady. I remember this lady, she was scared that day. You see that she opened two trades. It's one of those days I invited them to come and trade with me in the office. So she was scared, and then I saw the lot size she was using. I told her, no, 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 you open another one. Then she opened the second trade, and she came out with 327,000 naira. And this guy funded his account with 320,000 naira, and he made 122,000 naira. And this money was made in 1 minute, 2 seconds. This was one of the days I invited them to come and trade with me in the office. And the trade, you see 17:01:02, right? The time, 17:01:02. The trade was open 17:00 on the dot. And this trade took 1 minute, 2 seconds. So he made this money within 1 minute, 2 seconds. This person is a lady. She funded her account with 2.5 million naira. She made 1,149,000. She opened a gold trade with two lots, 1,149,000. You see 17:00:46. So she made this money within 46 seconds, right? Less than a minute. This person 17:01:20. So this trade was made within 1 minute, 20 seconds. This $800 profit within 1 minute, 20 seconds. This is 17:01:09. This is 432,000 naira. It was made within 1 minute, 9 seconds. This guy traded his account for 1 week. He funded his account with 9,402 and he made a profit of 16,007 after 1 week. And of course, he made a withdrawal of 16,700. This guy funded his account with 3,164. In one day, he made 1,421. This guy funded $1,000, made 264. This guy made $217 in one day. This guy, this is one of my staff. You see that he funded his account with 231,110 naira. He traded for 1 week. He made a profit of 892,000 naira, and then he made a withdrawal of 923,000 naira. And when you look here also, you see that it's the same person. He was having 33,682 in his account, and he took one trade on gold. Gold buy, you see XAU USD buy 0.2. He used 0.2 lots, and he was making 253,000 naira on it. And you see the equity showing 287,000 naira. And this is also one of my staff. Funded his account with 25,000. Can you see? Deposit 25,000 naira. But look at the profit, 1,280,000. He's an aggressive guy, actually. And of course, he made a withdrawal of 1,022,000 naira from just 25K. This is my own personal account. This was a news I traded. I funded the account with 13 million naira and I made 10.7 million. This trade took 6 minutes, 9 seconds. You see 17:06:09. So I did this within 6 minutes, 9 seconds, 10.7 million naira on 13 million deposit. And of course, I made a withdrawal of 23.7 million. This is also one of our clients, funded 1.6 million, made 448,000 naira. This guy funded 1.2 million, made 685,000 naira. This guy funded 3 million, made 1,512,000. And this trade was 17:07:34. So he made this money within 7 minutes, 34 seconds. This is also my account. This is also my personal account too. I funded $5,000 and I took a trade with 7.5 lots and I made 3,108. Now you see that the profit here is 3,202, but here you are seeing profit 3,108. Now this account was taken on a commission-based account, not a spread-based account. So instead of charging me spread, they charge me commission. And when you calculate the difference between 3,202 and 3,108, that's the commission I was charged. And then this is also my account. There was a day there was going to be a breakout on gold. There's what we call a breakout. So one of my staff was telling me, Oga, that thing it will break out to this. I said, okay, let me follow you people and take it now because I wanted to take the trade in the office. So I had one careless $500. I just moved it into another account. And then when the breakout happened, she told me about it and I took the trade and I did $437 profit on $500. And this one, I was explaining something to someone. There was $72 in the account. I was explaining something to someone, and then I was showing him, okay, so after this one now, you take the sell. Then later, when it breaks the support, now you take the sell. As I was explaining to him, I was opening the trade, and $72 now became 724, with $652 profit. All right. This is also my account. I made a profit of $8,193. And of course, I had $12,000 in the account before. I did a screen recording of this trade, which I will still show you. So I had 12K in the account. I traded and made 8,193. Then I made a withdrawal of $15,000 from the account. I took this trade with 10 lots. Yeah, I think I mentioned this earlier. This is one of the aggressive trades I took with 10 lots, and then I did 8,193. Then this is also one of our clients too. Funded his account 1,542, made a profit of 1,921. And this is also another guy too. Okay, this was in April this year. Okay, funded $1,800 and made a profit of $1,939. Right? So okay, the video, where's the video? Okay, let me look for that video. Where is it? 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 Okay, is this where is it? Could it be this one? Okay, I think it's this one, yeah. Okay, well, the presentations are different. Okay. So those are just how those things look when we make profit and all of that. So this is one of them. This is what we just looked at. All right. So this was a screen recording I did when I took that trade. You see that my balance here was 12,000. So I hope can you see my screen? I hope you can see my screen.
Yes, sir.
Yeah, so you see that the balance here was 12,279. Then I took this trade and you see the figures changing here. 4K, 5K. And you see the equity too. You see what I was pointing out about equity is your balance plus any running profit or loss on the account. Right? So this video is about 3 minutes thereabout. Yeah, so it was on 4K. There was a setup I had. It was a sell. I had one setup. I expected it to drop to a support. And I think I showed that on the screen too. I switched to the chart at some point. Yeah, so this is it. I sold here, I expected it to drop here. This is my take profit level. You see the way take profit level looks. So that's once the price gets to that level, the trade will just disappear from here. It will just close and you won't see the trade running again. Your balance has been updated already. So 6,000, 7,000. 7,000. Yeah. It just kept fluctuating anyway until they got to my TP. So you see the trade moving gradually towards my target. All right. So fluctuating between 6 and 7.
Can I ask a
7,000.
question?
Yeah, now it has hit take profit. You see the way the thing disappeared. Yeah. So it has hit take profit. You see the way the price dropped beyond that level. And then I was having 20,472, after making the profit of 8,000. Yeah, this is a profit, 8,193. So that's how it looks. When you hit take profit, the trade just disappears and you don't see your balance updated. Yeah, you wanted to ask a question, sir?
Yes, sir. What is the academic requirement?
Yeah, I will talk about it. I'll talk about it. Once we're done with the training, then yeah, I will talk about it. So that's just those are some of the trades we take. Then of course, sometimes I invite students to come and trade with me in the office. This is one of them. This was 2024. $368K, $377, 1.68 million naira, $226, 4.5 million, 369,000 naira, like that. So that's one of them. This one was July 2024 as well. Okay. So you see, I was addressing the students, giving them the instructions, and then when we took the trade, see the results: $321, $289, 2,400, $362, 151,000 naira, $321, like that. So it's always a good time, the hugs and all of that. Yeah, very interesting. So that's our Benin office, and this is Ibadan office. So those are some of them. There are many of these videos here. Many of them. Which one is this? This was November 2024. This was 2025, February 2025, June 2025. There are many videos like that actually. Which one is this one? September 2025. Yeah. This is our Benin office. Uh, $131, $277, $344, $217, $83, 400, $100, $520, 4,420, like that. So there are many of them. This was December 2025. Okay, I was in Ibadan then. Yeah, so this was Ibadan office. And this Benin office. So we just invite our students, come and trade with us, and of course we trade together. 1,004, 1,006, $84, $128, $591, $113, $729, 6,620, 3,192, 2,870, 1,779, like that. This one, I remember I told them to come and make Christmas one. This was on the 19th of December, a few days to Christmas. So I said, they should come and let's make Christmas money sharp, sharp. I was in Ibadan. So, and then this was Bini office. So 1,007, 1,005, 1,590, $170, 519, 842, 138, $4,976, $842, 1,890, $17. Who is this one? $36, 2004, 8,003, $3,900, $9,700, 1,859, 372, 876, 2,190, $76. So it's always a good time, really. 190, 142, like that. Then when I went to Benin, this was the first for the year. Yeah. When I go back to Benin, I invited them again to the office. This was on 9th of January. Yeah. Ibadan office. So the trade in progress, you see we're waiting for it to hit take profit. 2002, $220, $12,000. Someone made 14,000. This 772, $3,000, 4,004, 356, 1,001. I think this is the one someone made 14. Yeah, $14,000. Yes. 7,900, 142, $10,000, 1,007, $6,460, 891, 1,009, 852, 10,005, 5,563, $885, 4,065, 4,007, 4,930, 1,007, $199, 898, 125, 193. So it's always a good time. This was February again. We did another one in February. I was in Benin City then also. So we had another one again. About the office too. $356, $103, $167, $1,002, $786, $2,001, $414, $1,007, $4,002, $4,004, $453, $2,003, $409. So it's always a very, very good time, when we're able to come together, trade together in the office. And we do this virtually every week. Sometimes some months we have just twice a month, sometimes we do it every week, but we always announce it. ahead of time whenever we're going to trade together in the office. So people come, some people who are not physically around, they join online and everybody takes the trade together. We all make money together. So it's always a very, very good time. So these are things that you get to enjoy, of course, when you trade with us in the mentorship community. We trade together, every day. We trade together every day, but sometimes we all come together to the office to trade some news. We also have trading hubs in the office as well, where you can walk into the office with your phone or your system and trade. We always have analysts in the office. So if we have some people in Ibadan that they get up from their house, like they are going to the office in the morning, and it's our office that is their office. They just come and trade with us every day in the office. So, and those who are online too, we trade together online. So whether physical or online, we're just trading together. So this is the copy trading platform. This is how the copy trading system looked on Xness. But now Xness has stopped copy trading, but this is how the platform looked when they were still doing it. They stopped doing copy trading on 25th of June was when they stopped it. We had a copy trading account as well. And this was what we did last year between December and January, December 2025. You see the date here, 10th of December 2025 to 10th of January 2026. We did 23%. October to December, that's a 3 months period. 3 months period, we did 106%. Over a 6 months period between July and January, we did 209%. And over a 1 year period from 10 January 2025 to 10 January 2026, we did 325%. And when you look at the graph, you see that it's a very smooth graph. It's a very, very smooth graph all the way up, right? So our copy trading, it was a very, very good one on Extens, but they've stopped copy trading now. So for now, we're not doing copy trading. So you just link your account and go and sleep. So every possible way, we just make sure that everybody is making money, whether by copy trading or by personal trading or, anyhow, just make sure everybody is making money, right? So do we have any questions so far? Any questions so far?
Yes, I
Yes,
have
sir.
a question anyway.
Yes, sir.
Yeah, sorry, because the network has been taking my phone for the scene. But if I may
Oh,
ask, which period is the best period to enter trade?
yeah. We still have that one too. We're getting there. It's also something I'm going to talk about. We're getting there. So this is how the copy trading looked. And now we move on to another thing. Why do we trade Forex? The market is very accessible. Accessibility is a
My
very
network
good.
is bad.
Oh, okay. I said we are getting there. We are getting there. I'm still going to talk about it. I'm still going to talk about it. All right. So accessibility is a very accessible market. You can just download the app and trade on the go. The market is a 24-hour market. You can trade any time of the day. You can decide to trade in the midnight. You can decide to trade during the day. Any time of the day you can trade. It's a 24-hour market. Narrow focus. You can decide you want to trade only one pair and you make your money on only that one pair, right? You can have narrow focus in the Forex market, narrow down your options to just a few pairs that you trade. High liquidity is a highly liquid market. There's never a time that you say, I traded, I made profit, I now want to withdraw, and they say the money is not available. No, the market is really, once you make profit, it's already in your account. Right? And there's never a time you say you want to sell dollar, there's no buyer, or you want to buy pound, there's no seller. You always have buyers and sellers, but the market adjusts based on demand and supply. When the demand for a currency increases, the value goes up. When the demand for a currency drops, the value goes down. The market cannot be cornered. You cannot just hold the market to ransom because you're one rich guy somewhere. The way people do with the stock market. Right. Sir? I didn't get that. Okay, probably not us. Okay, the market cannot be cornered, and then high profitability. The fact that you have leverage from your broker, you can use big money. You can use small money to control big money. You put like the illustration I showed you where you use $200 to control $100,000. So that means the fact that you can do that, you can also make multiples of your capital in one day. It is very possible. So people will tell you, come on, you can make 10 times your money from trading forex. They are not lying to you. You can actually make 10 times, 20 times your money. There was one I did last month. I did almost 10 times my money in a little over a week. I was testing a strategy actually. It wasn't even my regular trade. I was just testing a new strategy I wanted to use for high risk. And then I did, almost 10 times the money in
So please,
just
I have
over
a
a week.
question.
Yes, sir.
So please, oh, like now, me, I have all my monies are in naira, yes, because I want to start. So all my money is in naira. So how do I get put it in dollars?
Yeah, you fund your account in Naira. When it gets into your account, it will be converted to the dollar value of that Naira you sent.
Okay, wait. Okay, I'll send it to the app in naira. Then
Yeah, you send it to
when it gets to the app,
Naira.
it returns to
Yeah,
dollars.
exactly. You see the dollar equivalent. And when you also withdraw, you withdraw in
Not from
dollars,
dollar.
then you receive it in Naira. Yeah. And you can also have a Naira account where you are trading in Naira account, like I showed earlier. So if you make a profit of, let's say, $100, instead of you to see $100 in your account, you will see 140,000 Naira. So,
Okay.
yes, you can trade in Naira too. So, high profitability. What's also unique about the Forex market is that any sort of movement is an opportunity to trade. Whether it is going up or it is going down, you can make money both ways, whether buying or selling, right? So that's the good thing about the Forex market. And having said that, it's important to know that as profitable as the market is, it still carries all the risks involved with financial trading. You should always be aware of these risks and never risk money that you know you cannot afford to lose. I know there's no free money anywhere, but don't use your house rent to trade. My rent is 1 million naira. I have 500,000. Let me go and trade Forex so that I can double the money and pay my rent. Okay, you will lose that money. I can assure you will lose it. Don't bring your children's school fees. My children's school fees is 500,000. Okay, I have 300,000. Let me go and use the 300 to trade. Then I'll now make 200,000. I'll go and pay my children's school fees. Okay, you will lose that money. Because when you're trading with money that you are emotionally attached to, you'll be making some irrational decisions. Your head will not be clear. You'll be too scared. I mustn't lose this money. Hey, I mustn't lose this money. Once you don't see minus 20, hey, minus 20, minus 20, you close it. The thing will not start reversing. Say, hey, I should have left it though. All those issues is because you are emotionally attached to the money and you will lose it. So when you are trading, it's always good that you trade with freedom. Some people ask me sometimes, can I take a loan to trade Forex? I won't say take a loan. And I won't say don't take a loan. But my own is, if you're taking a loan, make sure you're not depending on Forex to repay that loan. If your salary is 1 million, 1.2 million naira, and then you take a loan and they say you're going to pay 200,000 naira per month. Oh, of course, after paying 200,000 per month, you still have 1 million naira to spend for the month, okay? You're all right. You can take the loan. But you go to Lapo, you go and collect loan from Lapo. And the manager is even asking you, are you sure you can pay? You say, keep quiet. I'm a Forex trader. I'll pay you. Hey, Oga, you have sold yourself to Lapo because you will lose that money. Right? So it's very good that whatever money you're using to trade Forex is not money that you are emotionally attached to. Right? So that you can make very good trading decisions. If you trade with freedom, trade with a relaxed mind, you will make a lot of money. Right? So catching in on price movement, we have 8 most traded currencies in the market. USD is US
Sir.
dollar. Yes, sir. You have a question?
Uh, sorry, there was a time I was in that training,
Okay.
and the staff there tried to onboard me, but I was having issues. They said they will reset it. Up till now, I could not
Uh,
uh, I could not get in. That is one. The second one is that, sir, I know they called me recently to that they've started and they want to start another training. For us that are working, we don't have that much time to to come that daily or
Yes.
weekly training. Is
Yes.
there another way? Is there another way? Is there another way you can design for working class people so that we too can have access to this stuff?
Yes. I'm actually working on something online, which I would take myself. I'm working on something online, so we may have an online training soon. It will be likely Saturday, Sunday, or we're just working on something anyway. But once we're able to conclude and have something sustainable, then we'll let you know.
Yes, I have been saying that you used to invite people to trade with you guys. Please, when people used to do that, let me know. Is it or are there some specific amount of people you used to invite? And is it
Yeah,
on
it's
that WhatsApp?
only yeah, it's our students that we usually invite, like those who have gone through the academy. We just announce it on the mentorship community. Guys, we're having trading, so they come to the office and let's trade together. So yeah.
Should be that
So,
like
hello, sir.
Yes, sir.
Hello, sir.
Yes, sir.
It's not that we don't. It's not that we don't want to be a part of the academy. It's because of the time that is not convenient for us. Okay,
Yes.
if you are facing this live section on Saturday, is there no way you can invite everybody? Okay, people that are not in the academy, oh, this is money you will pay for that day, and we'll pay and be part of the live session.
Okay, well, we actually try to control the numbers because at some point we're having everywhere, so we just have to try to control the numbers because many people are coming to the office. But we're working on some on because most of the stuff we've been doing has been physical, physical, physical. But now we're trying to work on online so that we can reach a lot more people. So definitely we will be making those announcements as we conclude on them.
And please, sir, I think that suggestion too. If people that are not in the academy that would have attended because of their time constraint, like on Saturday, you want to do live section. If you can say for non people that are not in the academy, this is the fee you will pay to be in the live section and
Okay,
all
to
those
join the
stuff. If we
live
are to look,
trading.
yeah, to join the live trading, I believe it's still okay. For us, it's not
Well,
that for me, it's not that I don't want to belong. I want to belong, but it's just the
yes.
time.
Yeah, it's not a
Saturday, Sunday,
problem. It's not a problem. Once we're able to come up with the online plan for you, then once you go through the training, in fact, while in training, because our students who are even in training usually trade with us in the office. So once we're able to conclude on that, we'll definitely announce it. We've been having the
my
discussions from time to time, and once we conclude, we'll definitely announce it.
account too. I don't know what is wrong. I don't know if she wrongly inputted
Yes,
my email.
please chat with me.
To try to
Send me a message. Send me a message. Yes, I will assign somebody to handle that because, yeah, yes, I will handle it. Please chat with me. Send me a message. After this
thank you,
meeting,
sir.
just, yeah, send me a DM. Yeah,
Thank you.
I'll,
Thank you.
I'll attend to it. Okay, yeah, Mr. HT King. Yeah, you have a question.
No, since like you were talking about that you used to invite some people to trade with you people online. So
Okay,
me, I was
yeah.
saying like, it's possible for me to join.
Okay, it's only after you've gone through the academy that you can join the
Okay, it's
live
only
training
after
sessions.
I've
Yeah,
gone through. Okay, okay.
yeah.
So
Or
after this class,
while or
when
while
else
you
are
are
we
in the
going to have
academy.
class again? After this Saturday.
After this
After this
Saturday.
Saturday, when else are we going to? Is it next Saturday or how does it happen?
Okay, we're starting on
Or you
Monday.
post the time on the group?
It's on Monday. I will talk about it once I'm done with this session. Then I will talk about it.
Okay, okay, sir.
Yes, sir. So yeah, we have eight most traded currencies in the market. USD is US dollar, EUR is euro, GBP is British pound, JPY Japanese yen, CHF Swiss franc, CAD Canadian dollar, AUD is Australian dollar, NZD is New Zealand dollar. These are the eight most traded currencies in the market. But we have several others, like the Chinese yuan is CNY, South African rand. That's actually the only African currency in the Forex market. South African rand is ZAR. Nigerian naira is not tradable in the forex market. So we're just giant of Africa on paper, you know. Well, we're not even giant of Africa on paper anymore. So, all right. So before you place a trade, identify the pair you want to buy or sell. Which pair do you want to buy or sell? Euro USD, Euro NZD, GBP AUD. Which one do you want to trade? Now, what lot size do you want to use? After that, where are you putting your stop loss and take profit? Then after that, open the trade. You must make all these decisions before you open the trade, right? Know the lot size you are using, the risk you are taking, the stop loss or the take profit. All those things must be decided before you open the trade. If you open the trade without determining your stop loss or take profit, that means you are driving a vehicle without a destination. And that means when you even reach the destination, you will not even know you have reached there, right? So it's always good that you determine all these things before you open the trade. Now, the quest for volatility, the market is open 24 hours a day, but not every hour is good for every trader. There are some hours that are good to catch some moves. And we're going to look at this chart, right? When we look at this chart, you see that all the times here are GMT times. All the times here are GMT times. And you know that Nigeria is GMT plus 1. Now, we have the London session when the London Stock Exchange is open, and that is 8 a.m. GMT to 5 p.m. GMT. 8 a.m. GMT to 5 p.m. GMT. That is 9 a.m. to 6 p.m. Nigerian time. 9 a.m. to 6 p.m. Nigerian time. The New
Okay,
York
that's the best
session.
time for us that are in Nigeria to trade.
No, well, I'm only looking at the sessions and I'll show you the best times to trade for the day.
Okay.
Yeah. So London runs from 8 a.m. to 5 p.m. GMT. That's 9 a.m. to 6 p.m. Nigerian time. New York runs from 1 p.m. to 10 p.m. GMT. That is 2 p.m. Okay, this one is 9 a.m. to 6 p.m. New York will run from 2 p.m. to 10 p.m. GMT. That is 11 p.m. Nigerian time. Right? 11 p.m. Nigerian time. Let me write my M very well. Okay. As New York is closing, Sydney, which is Australia, is opening that same 11 p.m., which is 10 p.m. GMT. And Sydney closes 7 a.m. GMT. So that's 11 p.m. to 8 a.m. Nigerian time. And then Tokyo, which is Japan, will run from 12 midnight GMT to 9 a.m. GMT. That is 1 p.m. That's 1 p.m. Sorry, I said 1 p.m. 1 a.m. Sorry, 1 a.m. That's 12 midnight plus 1 is 1 a.m. to 10 a.m. Nigerian time. So London will run from 9 a.m. to 6 p.m. New York will run from 2 p.m. to 11 p.m. Nigerian time. Then Sydney, which is Australia, will run from 11 p.m. to 8 a.m. Nigerian time. And then Tokyo will run from 1 a.m. to 10 a.m. Nigerian time. Now, when you look at all these different times, there are some overlaps. If you look here now, you see that London and New York overlap during this period. If you look here, you see that London and Tokyo will overlap for this 1 hour period. You see that Tokyo and Sydney overlap here too, right? Now, what are the best times to trade? The periods where you can catch the best moves in the market are where you see London overlapping with any other session. And where do we see that? London and Tokyo overlap here between 9 a.m. to 10 a.m. Nigerian time. So that means in the morning, the best time to trade is 9 to 10 a.m. Nigerian time in the morning. Then in the afternoon, you see London and New York overlapping here You see the way London and New York overlap here, these 4 hours. This is 2 p.m. to 6 p.m. Nigerian time. So if you want to catch good moves in the morning, target 9 to 10 a.m. If you want to catch good moves in the afternoon, target 2 to 6 p.m. Nigerian time. That's where you see very good moves in the market. Right? Do we understand? Do we have questions on this? Any question? So you should also know that the one in the afternoon has more volatility than the one in the morning. The one in the afternoon is always very, very, very crazy, 2 p.m. to 6 p.m. because you have two of the largest markets in the world overlapping, and then it's always a very good time to catch very good moves, especially if you are trading gold. You will love the moves in the afternoon. All right. So that's the best times to trade during the day. Now, let's just look at some habits of successful traders. Be a constant learner, always be open to learning. Recently I said on the mentorship committee, I said, I'm still learning. Someone said, if you are still learning, then what hope do I have? I said, man, I'm still learning. I'm still learning. I was awake one night and I posted something on the group. It was in the midnight, and someone said, do you sleep at all? I said, man, I'm studying. So I was like, after 18 years in this market, I'm still studying. Learning never stops. So always be a constant learner. Develop a trading plan and stick to it throughout the trade. Have control over your emotions. Don't be emotional about your trading decisions. Once you're in a hurry to do something, don't do it. That's one thing that helps you control your emotions. Once you just see that you're in a hurry, you're in a hurry. Don't do that thing because you're emotional. Have a risk management strategy. There must be something you're doing that helps you to manage your risk. Practice proper money management. Stick to your trading strategy. If you are using price action based strategy, stick to it. If you are using indicator based strategy, stick to it. But the moment you are trying to combine the two, price action say sell, indicator say buy, then you're not doing mini, mini, money more. You will definitely lose that money because you're not sticking to your trading strategy. Live a balanced life outside Forex so that you will not come to the Forex market and come and be forcing the market to give you $10,000 in 2 days, right? When you are supposed to pay your rent, pay your rent. When you're supposed to pay your children's school fees, pay your children's school fees. Not the one that you come to the market and you say, hey, I want to raise my children's school fees before next week. Then where you're supposed to use one lot, you're using 20 lots. You will lose that money. So live a balanced life outside Forex. And then it's not everything you see on social media that you believe. I always say something that those people who are making serious money in this market, they are not doing social media with many of these, I'm not saying it's bad. Of course, you have people who are making money and then, they want to flaunt their wealth. Yes. But some people also do fake life. So if you're living your life based on what you see on social media and then you now want to come and be pressuring yourself, uh, you're a Forex trader, you're driving a Corolla, you are doing well. And then you see someone else who is driving a Range Rover or Benz. And then you now begin to look down on yourself and you're like, man, I must also buy Benz. I must also buy Benz. You don't know whether the person even borrowed the Benz. You don't know whether he borrowed the Range Rover. And you want to go and start, pursuing what is not pursuable. So I think it's very good that you don't believe everything you see on social media. Just live your own life. Always be prepared. News is coming. What pair do you want to trade when the news comes? Always be prepared. Then another thing is that you should always trade with a trusted and properly regulated broker like the ones we recommended in the group, Xness and FX Pro. You can use any of those links to create your account with the brokers.
Wait, wait, please, which broker do you say we should use? Which app do you say we should be using for it?
Yeah,
I don't get that one, please.
I posted it on the group.
Oh, it's on the group.
Yeah,
Oh,
I
okay.
posted it on the community. Yeah, and I will still repost anyway after this one. I'll still repost it. All right.
Okay, sir. Thank you, sir.
So there are some Forex trading rules that you also need to pay attention to. Number one, your lot size is your first consideration when you're about to open a trade. Always minimize your lot size and never take unnecessary risks, right? make sure that you monitor the kind of lot size you're using. Make good use of stop loss and take profit. Don't say you don't need it. Use it. It's not a must you trade every day. Watch out for specific patterns and patiently wait for them to form before you enter. Right? The fact that you made 10% yesterday does not mean you're going to make 10% today. The fact that you doubled your account yesterday does not mean you double your account today. So it's not a must you trade every day. Be patient for your setup to form before you go in. Only trade when you are sure of your trading decision. We know there's nothing 100% guaranteed, but at least you'll be sure of what you are doing first. Then, if it doesn't go, we know, okay, I was sure of what I was doing, but the market didn't cooperate, right? Don't trade randomly. Have a reason for going into any trade you are going into, so that in case the trade is not going your way, you're able to fall back to that reason and say, okay, this is the reason why I went into this trade. Is that reason still valid? If it's still valid, allow it to run. If it's no longer valid, then you exit the trade. Ensure you pay attention to picking a good entry point. If there's an opportunity that is 100 pips, it has moved 70 pips already, then you say, it remains 30 pips, let me go and take the remaining 30. That's not a good decision. But if maybe out of 100 it has moved 30, you can say, okay, it's remaining 70. Out of the 70, let me go and make 50 and dash market 20. That's a better trading decision. So pay attention to picking a good entry point. Don't enter trades when it's too late. Don't be greedy. Close your trade when you're in good profit. Like I said earlier, you are targeting 200 pips. You see 160, you say it remains 40. Oga, close that thing in 160. Then always learn to cut your losses. Don't keep believing a trend will reverse while you watch your account being wiped out. If you have $1,000 and you lose $40, you still have 960 that you can use to recover the 40. But if out of 1,000 you have lost 700, it's remaining 300, then how can you use 300 to now make 700 back? So it's always good that in case you are losing, you keep your losses low, cut your losses, know when to stop it. Don't keep thinking it will reverse, it will reverse. You are saying minus 200, it will reverse, it will reverse. Minus 300, minus 500, it will reverse, until it will clear your account, right? So be very careful of that. We've come to the end of the session for today. Do we have any questions?